today we're going to be discussing none other than Ultima Trades, 2021's high probability income generator. Again, my name is Don Kaufman. You are watching a TheoTrade presentation. A little bit of a risk disclosure. We're not financial advisors nor a broker dealer. And I put this up here specifically because I did spend about 15 years inside of the brokerage world, which I'll discuss here momentarily. Let's also get down to business of why you're actually tuned in to this webcast. I'll probably run, I actually added a couple of additional slides in here today, so I'll probably run a total of about 90 minutes. Hope that's all right with everybody, because I'm going to pack a tremendous amount into the next 90 minutes. One of the first things that we want to discuss here is we're going to discover why Ultima trades are ideal for the current market environment. And we'll explain what that market environment happens to be. To be able to potentially generate monthly income. We're also going to learn a few symbols, by the way, that professionals use on a daily basis in effort to actually create ultimate trades. We're also going to discuss expressly about where you can find edge as a retail trader. Some of that is actually going to surprise a number of you. So just kind of curious how many people that are joining us today. And again, we make this a relatively interactive session. I like to do these sessions not only live, like I like to do them when the marketplace is open. It doesn't do us any good to talk about the market when it's closed. We're actually going to use some of the dynamics of the marketplace throughout the course of today's session. And we're going to talk about edge. And I'm just curious, who here has some experience in the marketplace? Because again, you're going to acquire a lot. I packed a ton of information into the next, 90 minutes or so. We're going to talk about reaping the benefits of high probability trades while learning how to actually mitigate risk, not take large losses. And finally, which products are going to make the most viable candidates and what products are going to clearly be a bit of a recipe for disaster. So those are just a few of the topics we're going to cover. And as I said, we're going to jump right into it. There is a free expected move indicator. This is something I feel very, very strongly about. It's literally the simple, idea of we use this indicator to justify, if you will, markets being efficient or inefficient in any given period of time. And I'll explain to you what that means here momentarily. I reference this indicator kind of incessantly throughout the course of not only this presentation, but pretty much everything I do. Again, expected move literally drives the markets today. We will provide you this particular indicator right at the end of the webcast. Stay with me right to the end of the webcast. We'll give you the expected move indicator. It's a $500 value. It's the single most complex indicator ever, okay, scripted for the Thinkorswim platform here. Nevertheless, if you're curious what it looks like and what it is, and again, this is where I kind of deviate. I'm actually going to cruise over to a live trading application. In this context, this is actually the expected move indicator. And what you're looking at, let me go ahead and bring up a drawing tool here so you guys can actually see a little bit more definitively what you are looking at in these three lines. And make sure that we got our little writing board up here. These three lines, this is where the week started. This is the upper edge and the lower edge of an expected move. The expected move, these lines are depicted by options, right? Options early in the week are actually projecting how far the marketplace is going to move, and that's what the expected move actually does for you. So for the most part, what you're really looking at in those three lines, it's not just three lines drawn on a screen. It's three lines that are being derived from the options market. And it's saying, hey, this is what the option market indicates we're going to do this particular week. One of the reasons that I'm kind of bringing it up here, and this is the IWM, it's the Russell. This is a big move, big breach of expected move, big breach of expected move, big breach yesterday and today of expected move. There is definitely some inefficiency going on in today's marketplace. So you should absolutely expect some fairly wild behavior in markets in the forthcoming days. And that's one of the things, again, we will provide you this indicator. I want to reiterate this again. We'll provide you this indicator. It's free of charge right at the end of the webcast. We do that obviously, so you stay tuned in, stay with me right to the end of the webcast, and we'll actually give you a web address to view that. All right, little housekeeping item before we get rolling into some deeper ideas over here. Listen, this is a bit of a skill set that we're going to be talking about today, and as I said, there's going to be quite a bit of course material. So whatever it takes to keep you kind of focused, shut the door, turn off Skype, chat, whatever else might be distracting you. Definitely get rid of Facebook. Put the phones on silent mode. Kick out the kids, kick out the grandkids. The dog can stay, but you took the time to be here. So this is important. Again, even some of the most experienced traders, and I'm just reading the chat over here, but even some of the most experienced traders, I'm telling you, you're going to pick up some great ideas in today's session. And by the way, these sessions constantly updating, constantly, updating this with more, and that's exactly what you're going to see today. So here's a little bit about me. I like to do, a bit of an introduction, but if this is the first time you're tuning in, and anybody here, like literally the first time they've tuned in, they have no idea what a TheoTrade even is. Come on, these are not rhetorical questions. Jump in here anytime. Well, this is not going to help you guys. I'm drinking a little bit of caffeine over here, but here's a little background on me. So I actually grew up around traders, and that sounds kind of weird, but like, people always ask me like, how'd you get involved in the business? I have no idea. Okay, I have no idea how I got involved in the business. I grew up around it. And growing up around the business, obviously you have a natural, inclination and an interest in the business. So I had an uncle that was in the market making side of the business in Chicago. He started a really big trading firm. His firm grew to over 500 seats on exchanges throughout the world. So seeing that, as I was young, I was extremely young. He started the firm the same year I was born. And when I was a kid, I mean, the firm was absolutely massive at that point. They eventually sold the firm. It was called O'Connor and Associates to the Swiss bank in the 1990s. It was a multi-billion-dollar deal. Late 90s, I got involved in the business, and that was really kind of my start in the business. Is I got involved simply because it was just an interest of mine, watching family, trade and so forth throughout really kind of my junior high and high school years. But I started working in the late 90s in Chicago. A few years after that, I went to work for a firm. It was a startup. It was called Thinkorswim. Just some guys I knew from the trading floor. I mean, literally, guys I knew from my trading floor. Walking out of the building one day, and hey, you know what? You're young. You look like you know what you're doing down there. Because I stood right next to these guys, and they literally said, "Hey, you wanna come? We have a startup brokerage firm, and you look like you want to be part of it." And I'm like, I have no idea what I want to be part of. But I was 24 years old, and I took the opportunity. I went on to build the education division of a firm called Thinkorswim. I was on the executive team when we took the company public in 2007. I went on actually to the TD Ameritrade merger, and then I went on to actually run education for TD Ameritrade for about 5 years. By the way, everybody was asked why did I leave TD. I had a 5-year lockup clause, and the day that lockup clause ended, I was out. I was out of the contest. So I left TD Ameritrade, and at the time we had about 7 million clients. I left TD Ameritrade in 2015. We actually launched TheoTrade, this organization, in literally January of 2016. It took us about 9 months to actually build it. So during that period of time, both as a market maker, working in the education industry of course, a brokerage firm, I watched order flow for 15 years. And it's a really large part of what kind of brings me here. So the bottom line is when I talk about watching order flow, I could see everything you did and understand everything there is to know about retail clients. A lot of people position themselves as market makers and former market makers. Market makers know very little about the retail world. It's the brokerage houses that know everything about the retail world. And more specifically, individuals, especially like myself and the group that I worked with, we studied you, retail traders, for the better part of 15 years. We know everything people do. If you said, hey, I sold covered calls, we've studied you. We know who makes money in covered calls and iron condors and pretty much every strategy you can dream of. And a lot of what you're going to hear, specifically here at TheoTrade, and more appropriately today, a lot of what you hear today comes from our knowledge of that retail trading world. And more importantly, we watched what people did right and what people did wrong for literally, a decade and a half. By the way, if you ever need to get a hold of me after today, I'm just Don Kaufman. Just hit me at support@theotrade.com. Just put Don Kaufman in the heading and it goes directly to me. No if and or but about it. I actually answer emails. Yes, by the way, we answer emails here. We have no problem doing that. But if you need to get a hold of me, we use a common inbox. We do that just to, we have over 6,000 clientele here at TheoTrade. A little easier to kind of sort through some of the support emails. Nevertheless, go to support@theotrade.com, put my name in the heading, and it goes right directly to me. All right, with that, a couple of media appearances. This happens to be TD Ameritrade TV. I still do that on a weekly basis. I do CNBC periodically. Of course, this is more and more memorable CNBC. It's myself pitted against Kevin O'Leary. With that, let's get down to business. What's Ultima? So when people kind of tune into this, and I'm gonna actually stand up over here if you guys are okay with that. That's it. I'm getting rid of the chair. Okay. I tried to sit down. I'm not good at that. All right. What are Ultima trades? And when people look at this for the very first time, like Ultima, it's ultimate. Okay. It's not. It's definitely not ultimate. All right. Ultima has everything to do with volatility, which I'm going to explain here momentarily. So a couple of key points. Higher volatility has resulted in significantly more options premium, right? This makes option prices higher. So for those of you that are, again, tuned in today, first of all, I already said the word options. Oh, but still my heart. Listen, I'm not here today to bark at you about options for the next hour plus. Like, listen, there is some edge in the marketplace. I'm going to display it to you. That edge exists in and around options. One of the first things, higher volatility. When I talk about higher volatility in the marketplace, I mean, arguably volatility, let's come in here and let's just look at a chart of the VIX. Okay, the VIX, what is the VIX? It's the S&P 500 volatility index, right? And if you take a look at volatility, since the onset of COVID, volatility has been considerably higher. Now, granted, it's come down a little bit here. What you're going to learn in a minute, though, is what Ultima is really about. Okay. The next point is options implied volatility skew is at historically high levels. Okay. Now, for those of you that have been tuned in to myself or TheoTrade for any period of time, for the last year plus, we've already been talking about skew. The irony is now the mass media in just the last 2 weeks has been talking about skew because it hit all-time highs. The third point, the volatility of the volatility remains at record highs. And this starts to get into Ultima. When people ask what Ultima is, okay, you have volatility, which is like the VIX. Then you have volatility of the volatility. What's volatility of the volatility? You know what? There's actually a symbol for volatility of the volatility. You ready for this? Called the VVIX, which is the volatility of the volatility index. Okay, since the onset of COVID, it has actually remained pretty much north of 110. Today is really, really unusual. Volatility of the volatility is up with the marketplace up. So when people ask what Ultima is actually the volatility of the volatility of the volatility. You have to love that, but no, that's exactly what we're trading. We're trading Ultima right now. And I'm going to explain that in a little bit more depth. Listen, one of the primary places to receive edge right now is in skew. And I'm going to show you skew here in just moments. And I want you to understand that skew is incredibly beneficial at this point. If you're unfamiliar with the terminology skew, or just like a really brief and dirty kind of like refresher, listen, this is a normal distribution curve. Like everything you could do in your life fits under one of these curves, right? I always use this analogy, but there's really good drivers, really bad drivers. But then there's California, which is somewhere out here. It's skewed, right? Because everybody in California is a horrible driver. Come on. All right. We got to have a little bit of fun. We got to poke a little bit of California. Okay. Come on. How many Californians do we have on today? Come on, people. Admitting it's the first step today. All right. Nobody wants to admit that one. So what you have from time to time are skew. Okay. And when skew is prevalent inside of the marketplace, skew can provide edge. Now I'm just going to show you skew in this particular light. This is actually what we call skew, which is SKEW. Like the symbol couldn't be easier. You can find it on pretty much any trading application available. I mean, literally, this is the VVIX, which is the volatility index, but here's skew. You see, here's the one thing. A lot of people look at the VIX. The VIX is the volatility index. Okay. Then some people that maybe know what they're doing might look a little bit at what we term, okay, the volatility of the volatility index, which is VVIX. Okay. But then those that even get up in the learning curve start looking actually at skew. Skew, okay, is interesting because skew, which by the way is literally at the highest levels it's ever been. You can bring up skew in the entire history of skew. It's in the stratosphere right now. Skew is looking at like a VIX, okay, of the VIX of the VIX of the VIX. It is wild though right now how much edge there is if you understand skew. And right off the bat, I'm just telling you, okay, hey, how can we use skew to our advantage? Skew provides edge in the sale of out of the money options. I said the O word. So yes, as I said, I'm not here to shove options down your throat for the next, hour plus. But one thing you have to understand is why certain edges exist, what those edges happen to be. Skew is one of them. Just knowing what skew is, though, okay, isn't but 5% of the battle. Knowing what skew is and how to actually tactically take advantage of it. Like it sounds cool at the party. Like, you're like, oh man, yeah, I was talking about skew and got a little bit of kurtosis in there. Kurtosis is describing the distribution curve. None of that crap matters. That isn't even but 5%. What you have to do is you have to take something, okay, that's real, that's tangible, and you have to actually turn it into some degree of edge for yourself in the marketplace. That's what you guys are here for today. So I'm not going to talk till I'm blue in the face about, skew and so forth. Here's the bottom line, okay? You got to take what skew is and you have to actually tweak it into definitive P&L. Like, how can you actually take that? And the answer to that is we're actually going to use options, okay? And options are going to be the tools. In fact, we're going to sell options and we're going to then mitigate risk. Now, many traders are currently buying options and in effect, tweaking pricing to be beneficial for premium sellers, okay? Everybody's probably heard this, but whether you're aware or not, there are a ton of people, okay, in, for instance, these chat rooms and Reddit boards that are discussing options, and they are literally, hoarding together, commingling, if you will. I don't want to use any conspiracy, terms in here, but they're conspiring to drive prices of stocks using options. Here's the bottom line with all of that. Say what you will, they're buying options. They are buying options. Okay. This is what I call retail traders gone wild. This is yesterday. Like I didn't pick some just esoteric day. I didn't pick some abstract, some abstract day. This is the day after a holiday weekend. We traded 40 and a million, okay, 40 and a half million, sorry, 40 million contracts. It's just hard for me to say. After 15 years in the brokerage business, if you asked me 5, 6 years ago, when I was still in the brokerage world, would I ever see 40 million contracts trade in options? I'd be like, no way, man, that's crazy. Because I'll tell you what, when I was in the business just 5, 6 years ago, if we did, this is the total market, by the way. This is not like, just one brokerage. That's the total market, 40 million contracts trade. 6 years ago, we were trading 21 million contracts. So where's volume? It's 100, 200% beyond where it was. I mean, a slow day, just a few years ago, a slow day would be 12 million contracts. A slow day now is like 35 million contracts. Look, the average day year to date has been 39 million contracts have traded. Retail is all over it. Here's the funny thing. A lot of the retail world though is on the opposing side of this. Okay. What we're going to do with this knowledge of skew is we're going to actually learn to sell options. So, and this is again a little bit of Q&A in here, right? So when you're looking at this and you're learning to sell options, the first thing is Many of you have heard, kind of through the grapevine, if you will, that learning to sell options is the way to make money. How many people have actually heard that? Just say me, 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 me. You know, again, we have a lot of people inside of the room, and I just want to make sure everybody's awake. I'm awake. Can you see that in the camera? It's an advertisement for Red Bull. No, it's really not. You know what? I told my wife, do not ever buy me a Red Bull, or everybody's going to be in big trouble. So of course I go down there. And I see it yesterday, and I've been waiting for the perfect opportunity to use Mr. Red Bull. It's like a power pellet for me. That's a Pac-Man reference. If anybody forgot about that one, it's a power pellet for me. It's a bad idea. I like, you know what somebody said? I go, I'm scared to sell options. Okay, I've only bought calls and puts. You know, the funny thing is, okay, if you've experimented with selling options, which is the next point, you know full well that there's definitely risk involved. So today's session is going to separate some of the facts from some of the myths, some of the real risks, and some of the fiction, okay, some of the stories out there. We're going to talk about selling options. We're going to talk about selling options because right now it's where the edge lies. And I got to tell you, I'm going to show you my trades. I do not want today to just be, you know, here, this is what you could do theoretically. I trade heavily. Okay, I execute on a day-to-day basis. I'm literally watching, you know, all the screens. For those of you tuning in a little late, the reason I'm looking around is I got a monitor here, a monitor here, and a monitor here. I only have 3 monitors today, which is unfortunate. I'm actually in a I'm on my backup computer system right now. So again, let's get down to business and separate those fact from fiction regarding some of the risks of selling premium. And I think you guys are really going to enjoy a lot of what we're going to do today. Now, I also throw this out to you that those that are new, okay, coming in today, you don't have to have detailed experience of selling options. So I say this, okay, lovingly, do not panic. Like, you can do this. Maybe you know nothing about selling options, and that's okay for today. Maybe you know nothing about options at all. But here's the big news flash. Selling premium can now be done on really small accounts, and literally you can sell premium with as little as $2,000 in your account. The other aspect that's changed dramatically is how you get approved for options. We work with brokerage firms here. Again, because I come from the brokerage industry, we work with several brokerage firms, and it's important to know that you don't have to worry about getting yourself approved to do certain options and options related trades. We will help with that. Know that with $2,000 in your account, you can do literally anything that I'm discussing today. And I think that that's critical. So for starters, if you're brand new here today, grasp big broad strokes of logic. Those of you that are a little bit more experienced, we're going to get down to the weeds. So let's dive in. All right. First and foremost, there's many facets, if you will, of selling premium. There's a lot of different ways to sell premium. When I say selling premium, some people are like, what you talking about? I'm talking about selling options. Selling options, that could be a term. Selling premium, that's a term. Credit spreads, that's a term. Short call spreads and short put spreads, okay, like bull put spreads and bear call spreads, those are selling premium. Delta neutral trading, there's a lot of different styles of delta neutral trading. But delta neutral is predominantly selling premium, selling naked. I'm out there, baby, and I'm loving every minute of it. I mean, that's also selling premium, but selling premium just can be used to create both bullish and bearish. But for today's, you know, we're going to talk a little bit more about market neutral. So let's continue on. Probability and profitability. So everything you do in this business, whether you like it or not, whether you know it or not, okay, everything that you do in this business is based on probability. Okay. You and I, we can create trades all day long with a 90% success, and you can still lose money. You know, one of the things, and I love to mention this because I get emails to this effect all the time, and I'm just gonna level with you guys. I get emails all the time. People say, "Hey, I heard about you guys at TheoTrade, and I'd like to see your track record. How often you write?" And I'll tell you right now, okay, The track record is absolutely like, flawless. You can be right now. You can be right 95% of the time. That'll take us all of 2 minutes to teach you. Being right 90 or 95% of the time does not necessarily, okay, translate into profitability. And I need to stress that because as a client, okay, in this business and as a trader, you need to understand the differential between high probability and what profitability is. Does it matter that if you make money 9 times in a row, that if the 10th time, okay, you got completely like hammered, that isn't going to help you. It's not going to help me. It's not going to help any brokerage firms in here. It's not going to help anybody. Like the most important thing that you need to understand today and in the future, we are here to help you and to hold your hand as much as possible to get you, okay, to the profitability point that you need to be at, depending upon your account size. And it's just the bottom line. You got to remember, probability isn't necessarily the answer. Okay, that doesn't make you profitable. Remember that always. I love to start with that because, no matter how long I've been in this business, I just get emails every day, and they go, these people start off, he's right 95% of the time. Okay, being right 95% of the time and learning how to keep that capital, those are the key points. Markets are a trade-off. Markets are always a series of trade-offs. Higher probability, higher risk. You can be right 90% of the time and still lose money. So where can you find edge? And that's exactly what we're going to look at. That's what people are here for, right? Good. Okay, get ready, strap in, because now we're going to show you something very, very important. This is actually the first, I would say, tactical trade idea that I'm going to show you today. So we're going to start real easy on you. And again, some of you have experience in options and others don't. And I want to start off with probably, like the highest risk trade possible. Now, I actually want to start off with what I would construe as a risky trade, and we'll work forward from there. And I want to do this because it's the easiest example and the most plausible example. Okay. Here's a $50 stock. Now, I'm just going to tell you that I do not have the intention of buying the stock, but the stock is trading at 50. Okay. And every fictitious example that I give, I can't even say fictitious today. Every fictitious example that I give, I call stock. Instead of stock, I call it stock. Okay. And stock is trading right at 50. So there's actually a company called Stock. And ironically, they sell like iced coffee. It's quite good. I've partaken in it many a time. We're not going to own the stock. We have nothing to do with the stock. All I'm going to do is I'm going to go out. Okay, you ready for this? I'm going to sell a 60 call. And for that 60 call, I'm going to collect $1 credit. 60 call is for $1 credit. Okay, I'm out. Do I own the stock? No. What's a 60 call? Well, let's get to that. Because some of you are so new that you don't even know what a call is, which is okay. Now, I told you, I'm going to tell you, take only 2 seconds on this because I want you to understand, even those of you that are brand new, don't worry about like the context of the call. It's a call option. What do I do with a call option? He's talking about options. Listen, options really, honestly, they're not that bad. How bad could they be? People think this is like a different language. Listen, you got a call and you got a put. You could buy them or you could sell them. That is it. Like the pantomime over here. And by the way, when you tread on the floor, that's all you do is this, this, this. You know what? It's absolutely archaic. I got into the business in 1998, and I remember standing down there. By the way, I was 22 in 1998. Do the math. I'm 45 now, but I was 22 in 1998. 3 weeks out of college, and I remember looking down on a trading floor. I was actually on the catwalk above the trading floor, looking down on the trading floor. And of course, all these market makers are making markets like in all these technology stocks. I just got out of school. I understand technology to some degree. And I kept thinking to myself, I'm like, why are these idiots using hand signals and so forth? Like, this is the most archaic thing I've ever seen, It's like people down there like swinging their arms. It was brutal. I went down there for only about 18 months before I again joined Thinkorswim, but it was interesting because even back then I remember thinking, I'm like, this is ridiculous. This should be done like behind a computer screen. What are these people doing? Anyway, with that, let's talk about the context of call. Okay, what a call option is. Call options give you the right to what? Okay, the right to buy the stock at 60. So if I went out there, let's not worry about selling the 60 call. Let's talk about buying the 60 call. If I went out there and bought a 60 call, what do I want the stock to do? I want the stock to go up. If I bought a 60 call, I'd want the stock to go up. I didn't buy a 60 call, but that's okay. A 60 call gives me the right to buy the stock at 60. Do I want to buy the stock at 60? No. Then why did I buy the 60 call? Just in case the stock went to 100. Because if the stock went to 100, the 60 call is going to be worth at least $40, right? So you buy, why did you really buy the 60 call? You bought it on a wing and a prayer. Okay, bought on a wing and a prayer, hoping that stock would go up and go up big. But the thing that's not necessarily rationalized to most people when they get involved in options, for every call buyer, there has to be a seller. Now, a buyer has rights. I have the right to buy the stock at 60. The seller of the call has obligations. I'm obligated to give somebody stock at 60. So let's give you the opposing premise. Okay, one of the things that people have a mental block upon is, how can you sell a call? You never owned it. I'm not really just selling something, okay? I'm selling myself into an obligation. Option contracts are just that, they're contracts. The contract has a buyer and the contract has a seller. You decide which side you want to be on, right? You know, people look at this and they come on like CNBC all the time. They go, oh, check this out. Somebody bought 3,000 calls in Disney. Thank you, Captain Obvious. Somebody sold 3,000 calls in Disney as well. And nobody ever looks at the business that way. Yes, but they initiated the trade by buying the calls. Well, okay, because the other person initiated the trade by selling the calls. You go, oh, yeah, good point, good point. So it's kind of ridiculous to think like, you know, the buying of the calls. Anyway, sell a 60 call. What does a 60 call obligate you to do? You're obligated to give somebody stock at 60. Do you own stock? No. Do you want to own stock? No. Then why are you selling a 60 call? Because I want to keep $1. Don't worry about the risk right now. I know there's risk in this trade. Okay. I know there's a ton of risk in this trade, but you sell something for $1, what's the most you can make? Let's talk about that for a second. If you sell a 60 call for $1, what's the most you can make? $1. Okay. You make more than that. Listen, if you sell a used car and somebody gives you $10,000 for the used car, do you think they're literally going to come back like a week later? They go, "Whoop, it was the best used car you ever sold me. I'm going to give you an extra $5,000." No, when you collect $1, that is it, baby. It is over. The most you can make is $1. So when you sell a 60 call, let's just give this, you know, brass tacks. You sell the 60 call. What do you want to have happen? Absolutely nothing. If the stock stays flat, keep your $1. If the stock goes anywhere down, keep your $1. If the stock goes down even further, you definitely keep the $1. If the stock comes up to 55, you keep your $1. Get a little nervous. What if the stock goes right to 60? You go, oh, I wet myself. But you still kept your $1. And if the stock goes to 100, what are you? You're screwed. Where risk comes in of selling options. Why does the risk come in? Because nobody likes to go out there and make $1 and make $1 and make $1. And then all of a sudden one day you go, oh, I lost 40. What we have to learn here, how do you not lose 40? But let's not get to that context just yet. Okay. I want you to think to yourself, okay, in kind of retrospect, like how high the probability in this trade really is. When I talk about probability, what can happen in a market? Market can stay flat. Market could go down, the market could go up. From a probability point of view, though, this trade must have a decent probability because the market stays flat, I make money. The market goes down, I make money. The market even goes up, I'm probably going to make money. Just if the market gets above like 60 plus the $1 that I collected, then I'm going to start to lose money. Then what do? I hemorrhage, man. I hemorrhage. But, you know, the stocks go from 50 and trade to 100 overnight, only if it's Amazon. But in all seriousness, this from a probability point of view is an extremely, extremely high probability trade. Are we okay with that so far? Are we? Let's get to that. Let's get to that and make sure that everybody understands that point. Okay. And again, we're going to come in and we're going to use a real example in here too. I mean, by the way, this is skew. So what's a real example? You guys give me, anybody want some stock? Okay. Give me a couple of stocks that have real examples. Sorry, I'm pulling out my trusty iPad over here, but it's just easier to read your questions off the iPad than it is, right? So shop and so forth. Okay. Oh, you're killing me. Shop that's a big boy stock. That's a big boy stock to start with. I was going to start with something like a Twitter. I always use like something I'm looking for a stock that's trading between like 50, maybe $100. I'm starting off gentle. Like going into shop is ugly. Oh, you had to bring up like Disney. Okay. Really? Disney, all things. Okay. Um, let's start with Twitter. Now I know that stocks have earnings coming up. Everything's got earnings coming up. A quick glance over at the Tweeter. Tweeter's earnings are coming up late July. Look, I just want to throw something a little bit off the cuff. Okay, off the cuff to show you probabilities. Twitter is a $69 stock. Okay, let me just close that up for a second. Here, look, Twitter. I'm just going to circle a few things. This is Twitter. It's a $69 stock. You know, people talk about probability till they're blue in the face, and they don't get it. And by the way, a lot of the calculations that are built here in Thinkorswim, including like some of the probability calculations, I worked on. I know these calculations forward and back. Look, this is where I was saying earlier. Don't ever get led down the idea that high probability is the way just to make money. Here is a trade. If I went out right now, okay, and I sell this 90 call, I'd be selling it for about $1 of a 90+% probability. Does that make me money? Well, it does. It makes me money right now. But the problem is 90% unto itself, that doesn't display edge. Looking at a trade and saying, I'm going to be right 90% of the time, that isn't edge in this business. Edge in this business has to be obtained through other means. But I wanted you to see these probability calculations because it only takes a second to pull up a calculation called probability out of the money. And every major trading application has this now, whether it's E-Trade, whether it's Tastyworks, whether it's Thinkorswim, whether it's TradeStation, even interactive brokers. Every major platform has probability calculations. And this was actually started by Thinkorswim. Thinkorswim's had probability calculations on the platform since 2001, right? Like this is nothing new. So that's why I start with that. But I wanted to give you a trade, first and foremost, that has a high probability, okay, of what? Of making money. Now, once we understand, all right, I got the premise down, Don. We're going to sell something and we're going to sell it way out of the money, but show me the edge. And that's what we're going to start to work our way into. Show me the edge, okay? Some of the edge comes in selling options, which equals positive time decay, okay? When you sell options, every day that passes sees the dwindling of options premium. As time passes, the options you sold decay exponentially. So we're going to take a moment to review decay, okay? We're going to take a moment and review decay. How many people have seen this decay graph before? So I don't want to, sorry, I'm laughing at, okay, at least you guys have a sense of humor in the chat room over here today. You're killing me, Smalls. Anyway, with that, why do I do this? For sheer amusement, actually. I made a decision. I'll just tell you guys a quick story. I made a decision years ago when I was working at TD Ameritrade. I was there when we took Thinkorswim public and did really well in the exit of the company and did really well in the exit of TD Ameritrade. So somewhere along the lines, I was like, oh, this is brutal. This is boring. Can't do. I didn't want to work in the brokerage business anymore because it's terrible. It was all this regulation and stuff. And I made the decision, obviously, to leave TD Ameritrade at that point. I basically said for the last 3 years of TD Ameritrade, I go, every day I'm going to wake up, this is either going to be fun or I'm not going to do it. So yeah, I have to amuse myself while doing this because, well, it's amusing. With that, When you look at a decay graph, here's the interesting irony, especially for those of you that are experienced. The decay graph is a huge misnomer. Okay, you're actually being led down a very, very dark path. So a decay graph looks something like this. Okay, and that decay graph couldn't be any more misleading. So when you start with this option, the option's at about $2, and let's say that there's exactly 1 month to this option. So here's an option and it's trading for $2. You look at the option and let's say you buy it, right? You buy the option for $2 and nothing happens. Okay. And then maybe like a week later, the option's not trading for $2 anymore. Now the option's trading for $1.80. And you're getting nervous, but you're like, I'm okay. I'm okay. I only lost 20 cents. And then like another week passes. So you started with a month and a week goes by and you only lose 20 cents. Another week goes by and you're like, oh, 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 this hurts. The next week hurts because the decay is picking up exponentially. So your $2 option went to $1.80, in week one. By week two, it's only worth $1. You're like, oh, you're killing me. You're killing me. And the next thing you know, it's worth like 30 cents. You're like, screw it. Okay. You probably end up buying some more out there and it ends up, at zero. That's the decay graph that most people are exposed to. Yes. Okay. So make sure we're on the right path. Because again, if you've traded, especially with a month to go to expiration, this was your livelihood. You think I don't know? I watched people's accounts for 15 years. You can't, before you open your account, I can already tell you everything about it. You tell me the account size, if you're speculating, your options knowledge, you tell me and I'll tell you every position in your account. You think it's crazy? You'll see. Okay. Every nuance, every thought you've ever had, trust me, we watched you. Okay. And we studied you. So that's decay. Here's the big misleading part of that decay. What wasn't told to you, that is decay of near money options. When I say near money options, okay, this is the part it's going to blow your mind, all right? And it really will blow your mind when I show you this. When I say near money, now we're going to go to a big boy product. I'm going to use the spiders, okay? And I'm going to open up an option that has about 30 days left because we were just talking about an option for a month, okay? You just saw the decay graph of options that are here, that are here, that are here. What I call near money. The money is the stock price. The money right now is trading what? At 434. So everything in here, this is what I mean by, okay, these are the decay graphs that you've always dealt with. Have you ever dealt with a decay graph of an option that's far out of the money, a high probability trade? And the answer is no, because nobody goes out there and touts those. There's no one educating people, okay, on how options decay, all right, proper, all right, way of doing so. This is where some edge lies. Now we're going to get a lot more interesting, okay? We're going to go out now and we're going to use a $100 stock, okay? And in this $100 stock, there's going to be a lot going on in this example, so hang with me as I take you through it. Here's a $100 stock. Do I own the stock? Absolutely not. I'm going to go out there and I'm going to sell a 120 call, okay? Exactly the same as the other example, but in this case, I'm still going to collect $1 credit. So I'm going to sell a 120 call for $1 credit. Okay, then what do I do? Okay, what do I do at that point? Sell it for $1 credit. First of all, okay, how far does this stock have to move for me to start losing money? Got to go up 20 bucks for me to start losing money, or 20%. What's the probability in the trade? Probability in the trade is probably north of 90%. Okay, stop right there. So what's wrong with that? I need to know what's wrong with that. Okay, what's wrong with this trade? Okay, what's wrong with this trade is that people are worried about the risk. They're worried about, what if I'm wrong? Okay, what if I go out and I do this trade? What if I go out and do this trade and the stock jumps from 100 and jumps all the way to 140? Better yet, what's the margin in this trade? People are always asking me that. What about margin? How about if I told you, don't worry about the margin, we'll take care of that. Okay. You can circumnavigate most of the margin requirements of the trades now. You just have to know what to trade, how to trade it. Okay. What if I told you you pick a product that can't jump overnight? What product doesn't jump overnight? What product could that possibly be? I just showed you the spiders a second ago. Could the spiders be a possible candidate? Again, when I started out today, I started out with some really mild bullet points. I told you, I'd show you some pretty good candidates, some not so good candidates. What could be a recipe for disaster and what could actually be a recipe for success? Listen, I am really far out. And everybody looks at this, you go, you can't do that. You want to see me do it? You want to see me do it in the real marketplace? Okay. And $1 credit. So what, Don? You made $1. Okay. If you do one contracts, options are traded in contracts. One contract, you're only going to make $100. So what? You don't have to do one contract. You could do 10 contracts. I didn't even get to that point yet. You make $1,000 off of what? Selling an option that's 20% away from the stock price. Can you really sell that far out? Well, let's go take a quick glance. Let's go take a look now at a real marketplace. And let's see what we can actually achieve looking again at a real example. I'm going to go into the spiders. Now, I'm going to go into the spiders. Follow along. I will explain everything. I'm going to go all the way to the October options. How far out are the October options? By the way, I'm picking October today because, first of all, I like to amuse myself and torture each and every one of you. Secondly, I'm picking it because it's a perfect example. It couldn't be better today because it has precisely 100 days to expiration. And anybody that's ever sold options looks at this and they go, oh, why would he ever sell anything that far out in time? Because the decay is absolutely phenomenal. About that, if the decay is phenomenal, what do you care what option it is? If you can make money off of it, what do you care? You want to see edge? Here's edge. I want you to look 100 days out. Why do I want you to look 100 days out? Here's the first lesson. Okay, don't believe all the crap and hype that you hear about markets. Right? And here's some of the crap and hype. When people teach to sell options, most of them have no clue what they're talking about. Because take a look. When you sell options, look over here on the right-hand side of the screen. Okay, what are you really selling when you're selling options? You're selling, okay, volatility. You're selling volatility. You go, no, I'm selling time. Okay, time and volatility are one and the same, but you're really selling volatility. This is what Ultima is about. Look at the option that expires, well, 2 days. The option expires in 2 days is at 11%. Okay, what does that mean? Doesn't matter what it means. You know what matters? The option that we're selling has about a 20% vol. But still my heart, we have found an option that's trading for double the premium, double what? Double what the short dated option. Somebody goes, well, okay, I wouldn't sell an option with 2 days. Yeah, would you sell an option with, say, 30 days? Even the 30-day options are trading for a 15 vol. There's nothing to sell. Okay, there's no meat on the bone. We're going to sell something, okay, 100 days out. I'm not saying you're going to sit with a position for 100 days. And I'm going to emphasize this and overemphasize this and we're just going to get crazy with it. Okay. Look at this. I'm still scrolling. I'm scrolling like a madman. Here you go. I am simply going to pick an option that is trading for $1. There's no criteria. There's no thought process to this. Because I was using previous examples of $1, I'm going to continue with my logic and continue with $1. We're going to go out. Okay. We're going to sell this option for $1. Now, I'm going to write all of this on the top of the screen. Right? Watch very, very carefully. Okay. Because we're going to go out and we're going to sell, okay, a 471 call. And we're going to collect exactly, I'm just going to make it $1. Okay. I'm going to collect exactly $1. And this option for the October expiration. Okay. Done. The fans go wild. Now what are you going to do? Okay. I'm going to do nothing. We'll talk about what we're going to do to manage risk, because selling a call and selling it naked could be extraordinary risk. Now, could the market go from 430 and jump overnight to 470? Probably not, because this is the S&P. The S&P doesn't jump. It could move though, and it could move up, and it could move up substantially. I mean, we've just gone from 400 to 430, like really, really fast, okay? But before I go any further, okay, right now I've just put this position on and I collected $1. Now, what do I want to have happen to this product? Okay, I love this. I love this because everybody's okay. I love somebody's freaking out. Oh, you can't go that far out in time. Okay, it's all wrong. See, everyone that has learned this business, you learn about option decay, but what you haven't learned about, all right, is option decay and out of the money. Okay, you also haven't looked at markets much and studied them. If you took a quantitative look means a math geek look at options in the last 16 months since COVID, okay, a lot of edge has shifted, okay? What I'm going to show you is this, right? I'm going to do nothing. I'm going to put the position on. Now I'm going to do nothing. I'm going to close up this option chain. I'm going to wait, okay? And I'm going to sit here on my hands and do nothing. And I'm going to wait for exactly 28 days. What's 28 days from now? I know. Look, we're going to look at the 100-day options, and then we're going to look at the 72-day options. Why are we going to look at the 72-day options? Because the 72-day options are worth exactly, okay, the same, but it's just fast forwarding 28 days. Does that make sense? That blows people's minds when they first see it. So what I'm going to do is I'm actually going to look at the same 471 call. I want to know, how much can I make? Oh, look, how much can I make in the next 28 days for doing nothing? I'm not going to hold this thing for 100 days. What are you, crazy? I ain't tying up my capital for 100 days. How much can I make in the next 28 days for doing absolutely nothing? Okay, everybody's doing something. I'm doing nothing. Well, how much can I make in the next 28 days? I'll tell you, assuming the marketplace stayed flat. Let's assume the marketplace stays flat. Okay, how much can you make? You tell me. 28 days from now, I'm going to go and I'm going to buy back. By the way, you can see I've got positions in here. I'm going to go out and I'm going to buy back my 471 calls, write it up there. Okay. So I rounded. I'm going to turn around and then I'm going to buy the 471 call. And I'm going to buy it for approximately the minus 40 cents. Okay. I'm just rounding it down. I apologize. I'm rounding it down. What am I making? I'm making 60 cents, or I'm making over 60% of the total premium on the option for holding the position for 28 days. Don't ever tell me that there isn't options decay 100 days out. What people do not get is it's not just options decay, it's volatility compression. Volatility is dropping the closer you're coming to expiration. You can make over 60%. You have to know the precise options to sell. You have to know how to then mitigate the risk, because I don't want you to do this and take open-ended risk. Okay, that isn't for everybody. And a lot of people look at this and they look at the margin, they go, I can't do this. The margin's outrageous. No, it's not. What if I told you the margin on a trade like this, okay, is less than $1,000? The margin on this is less than $1,000. You have 2 grand in your account. You can absolutely do trades exactly like this. Okay, why aren't you doing this now? Okay, these are not diagonals, by the way. These are not diagonals. No. This is the opening position. This is the closing. There's no diagonal. I'm just selling something and then I'm buying it back. 28 days from now, assuming nothing happened, you're going to make 60%. Okay, that's how easy it is. Now, are we okay there? By the way, I could do this all day long, all day long. I just want to make sure everybody understands the example of, people think that, I got to go out there and I got to sweat, and you go, well, should I just make your 60% and move on? And then what do you do after you make 60%? I don't know. It's going to be amazing. Maybe I could do it again and again and again and again. Okay. See, I don't have that many positions in the spiders. Where do I have positions right now? I'll tell you exactly where I have positions. I've got positions in the QQQ. I think the QQQ is quite advantageous. So I have positions here, positions here, positions here, positions here. You go, why do you have positions in 4 different expiration cycles? By the way, that's what this little POS stands for. I want you to see this. By the way, one thing that we do here at TheoTrade, okay, like it or not, we are completely and totally like open book. I will show you every position that I've had, good, bad, or indifferent, whether we're making money, whether we're losing money. Okay, position, position, position. Why do I have positions in 4 expiration cycles? Because I sell this, okay? And before you know it, it becomes the 85-day option. Before you know it, I'm buying them back here, and then I'm putting more on. And before you know it, I'm actually rolling in 4 different expirations at the exact same time. It's party, people, okay? I'm in this not to just make money once. I'm in this to actually make money with a cyclicality. I'm in to make this what? Potential monthly generation of income every 20, 30 days, putting positions on, taking them off, putting them on, taking it off, recycling the capital, move forward with the time. Okay. Breathe, because there's a lot more to this. Breathe, people. Okay. We okay over here? All right. Don't worry about the margin. Okay. By the way, this is not a reverse calendar, not of any kind. It's not a reverse calendar. I opened a position just by selling an option naked. And then I just bought it back. That's it. That's it. I just sold an option. And I just bought it back. So what's the catch? The catch is, what do you think Ultima is? Ultima is actually knowing the exact option to sell and how to actually hedge it. We're going to move on. We're going to move on a little bit. I'm going to get into this a little bit more because I'm showing you in the most simple context of using a call. But there's so much more you can do. Okay. Now, you may have noticed in my example, I sold options a few months out in duration. Typically, traders sell shorter dated options. However, that's why you're tuning into this webcast. And that's why specific criteria is of the utmost of importance. It's critical, right? And criteria, if you're unfamiliar with that term, it's literally like exactly what option to sell. You know, what Ultima is over here, specifically today, it's not about me telling you to sell options with 100 days out. It's not me showing you my positions, selling options 100 days out. It's you, okay, getting the definitive criteria, like the recipe that says, these are the options you sell. This is when you open the position. This is you close your position. What products do I trade? And more importantly, how do you hedge? What do you mean hedge? That's the risk mitigation tactic. Because I'm going to tell you, anyone listening to this webcast, okay, anyone. All right, by the way, I just want to get this. So you need to sell options out and buy it back 28 days. Okay. No. Don't worry about negating the risk. Okay. You know what's funny is everybody's trying to figure this out right now. Those that have experience, don't you worry about this. Listen, anybody tuning in today could have figured out I should sell options and I should buy them back. But you got to know what options to sell, when to buy them back, how to mitigate the risk, because this is what happens to most people. Most people go out and they do what's called the 90% probability and the 10% hammer. Okay. Again, so I showed you a trade. Okay, 2 trades actually. I showed you a little Twitter trade. Maybe I showed you a little what? A little spider trade. By the way, I even show you the trades I've done. Okay, here in the QQQ. If I open up the QQQ, you start scrolling. Okay, keep them chickens scrolling. Oh, look at this. I've got an option all the way at the 405 level. Do you realize the Qs are at 361? They've been straight up. And I'm out there and I'm selling the 405s. Why am I selling the 405? I don't know. Maybe I want to collect a little premium. Okay. This is about taking in incremental premium. You know, we're not necessarily trying to hit the ball and the cover off the ball. I'm trying to hit singles and doubles all day long, but consistency is absolutely critical here. What a lot of people get caught up in though, is that the trades, okay, they have a 90% probability. You're just hitting it. When you trade high probability strategies though, and you're wrong, okay, you get absolutely hammered. Like, think about this. 90% sounds great, but 10% of the time, the market rips your face right off. If you don't know that terminology, that's because you have not been in this business long enough. Huh? Rips your face off. There should be like a graphic definition book for all the trader terminology. Rips your face off, run over, whatever you want to call it. The marketplace basically trounced on upon you, and it's not a warm and fuzzy feeling. So, you know, the one thing I'm going to tell you the livelihood that some of you experienced. Okay, don't look at the slide. Don't look at the slide. I'll even back up. How many people that are tuning in today have actually traded iron condors? Iron condors. If you're unfamiliar with an iron condor, what an iron condor does is it sells way out of the money options, and then it buys other options to hedge the options that you sold. So you're selling options. By the way, the iron condor risk graph looks like that. That's the iron condor risk graph. Is that close enough? Yeah, I have to actually look in the camera over there, make sure I got it right. The iron condor risk graph looks like that because you sell options and you buy other options to hedge the options you sold. Okay. So let me tell you the plight of the iron condor seller, because some people have actually tried selling options and they're listening to this and they're like, no, 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 I've done this before. I know how this turns out. I know exactly how it turns out. This is exactly what you did. So you tuned into a webcast maybe 5, 10 years ago and you learned to do iron condors. Maybe you tuned into a webcast 2 years ago. I don't know. Where you read a book and you learned to do iron condors. So you go out, you do this iron condor, which is selling way out of the money premium. Okay. And the first iron condor that you did, lo and behold, it was probably in a product like the spiders. And you made money. And you're like, holy crap, this is like the first thing I've ever done in the marketplace where I made money. So the marketplace, you made money in the first iron condor that you did. So you do another one. Month number 2 comes and you do another iron condor. You made money again. It is a miracle. By the 3rd month, you're no longer doing one contract. Okay, you were running around the house in your Captain One Lot cape going, I made money, Captain One Lot rides again. But by the 3rd month, you're not doing one contract trades anymore, are you? No, no, now you're doing 5 or 6 contracts. You're still in the spiders. And the market lets you make money a 3rd month. By the 4th month, you go, me ready. Okay, me big ape. Big ape steps into the SPX. What's the SPX? It's the mother of all products. It's where good retail traders go to die a horrible death. So you step up into the SPX. The SPX is the mother of all products. What is the SPX? $4,000 behemoth from which there is no escape, the widowmaker of all products. The SPX on the 4th month allows you to make money. So now you're thinking you're going to be the next Warren Buffett. By the 4th or 5th month, though, this is where you start to amplify your contract size. And the market's good at this. It goes, come on, come on. And literally on that 4th or 5th month, you start to scale a little bit. You go to scale, and what happens? Oh, it's a train wreck. Not only do you lose money of the previous 3 to 4 months, but you end up losing also half your account. It's the plight of the iron condor seller. And it has got to stop. There's no edge. There's no edge if you just go out there and sell some options and just pray that it doesn't go against you and the market moves. Okay. And, again, you lose all the capital that you made, and then your losses even exceed everything that you made in the previous 3 trades. And I put on the bottom of the slide over here, I know it's like I can see your account. I could. For 15 years, I watched this crap happen. Okay. Watching somebody's account is the most horrific thing. It's like watching this really, really bad B-rated movie where you're like, lady, don't go in there. Like there's a guy with an axe in there. Don't open the door. And the next thing you know, you're getting slaughtered in the SPX. And that's what happens to retail traders. But then you get smart. Okay. Huh? By the way, did anybody ever do this before? Oh, by the way, the iron condors really do rack up commissions. Amen to that. Huh? Anybody ever do this? The plight of the trader. Wait, you don't know what's coming next. And then after you experience this, and you've sold options, and you've gone through this huge, hideous experience, I made money, got killed. Then you come with this wonderful idea. You go, I can fix it. So you go to another webcast where they tell you, don't worry, any trade that you do, you can fix. They call it like morphing, and fix is a dirty, dirty word. Listen, I studied retail brokerage accounts. For 15 years, what we did at both Thinkorswim and TD Ameritrade is we actually used big data. What big data basically meant is if you had 1 million people that were trading iron, like iron condors, or for instance, 1 million option accounts, and 250,000 of them were trading iron condors, you could literally say, how many people are trading iron condors? And of course, the computer kicks back at you. This is the number of people trading iron condors. Of the people trading iron condors, what's the most common product they trade iron condors? Boom, it says the spiders and the SPX. Of the people that trade the spiders, how many are profitable trading iron condors? How many are profitable in the SPX? I could literally tell you every nuance. I could even tell you the people that fix the trades. Okay, fix the trades. I'm a total cynic about fixing. Okay, fixing a trade, 15 years in the brokerage business. I'm a total cynic regarding good trades gone bad. Anytime you're fixing a trade, you're just adding more risk to an already losing trade, and you're just racking up transaction costs. Huh? Yeah, maybe some fixes work, but the very notion of fixing is just throwing good capital after bad. Like it's absolutely archaic. You cannot do this. And it's just going to lose more money. Here's the best analogy I can give you. Fixing a trade is the same as this. I want you to take a car, and I just want you, don't be in the car, drive the car right off a cliff. Drive the car off of a cliff, then bring it to a body shop. What are they going to tell you? They're going to tell you that car is an absolute piece of crap. It is totaled. Let it go, baby. And they go, but I paid 50,000 for the car. They go, you paid 50,000 for the car? Well, newsflash, it'll cost you 60,000 to fix it. Total it, it's trash. I'm going to tell you the exact same thing about your trade. Okay, do it right. Learn how to correct good trades gone bad. If it's a piece of junk, let it go. You have to learn the right way to sell options premium and mitigate risk, which brings me to this point. Now we're going to talk a little bit about selling options premium, and I'm going to get very, very finite on you here. We're going to go into some depth. Okay, there are three aspects, three trades you must learn. You must learn three trades to learn how to hedge this. Okay, the trade could be so simple. I sell a call or I sell a put. That was my previous examples. Selling options without unequivocation is the easiest thing you're ever going to do. You just go out and you go, bing, sold. In fact, okay, just to further that example, like, you know, when you guys look at this stuff, you think, you know, it's good, it's good talk, but you know, hey, listen, let's go look at our example, because I want you guys to be able to go back here. Look, the S&Ps are up $160. I want you guys to be able to come back, and I want you to be able to come back here, you know, 30 days from now to look at the actual trades. So to look at actual trades, why don't we just put on a trade? Okay. So in this context over here, like what did I do? Here's these 171s. That works for me. I mean, or sorry, the 471s. We could do the 471s. Even further out, but this works. Okay, this works. The option right now is trading you know, $1.02 by $1.04. Let's middle of the market. Let's get crazy. Just middle of the market, and they're going to fill me almost immediately in this. He confirms it. He confirmed and sends it. Oh, filled. I already know I'm filled. I know I'm filled because I didn't see the $1.03 come up over here. So I just sold. I am Captain One Lot. Captain One Lot rides again. But I want you to see that I'm not afraid of selling an option 100 days out. In fact, come back to our example. But before I get into selling the option, because as I said, selling the option, easiest thing you're ever going to do. I sold an option. What I just did in the other account, and I traded in the account. That is not a paper trading account. So we're all clear. That is a portfolio margin account. Nevertheless, what I did in that account, we have the full Monty here. We show you absolutely every position that I've got on. In fact, I'm going to show you 6 months of trades. Before I do that, though, as I said, you have to learn that selling the options the easiest thing you're going to do. What you really have to learn, okay, is how to mitigate what? The risk. You got to mitigate the exposure, okay? Three aspects that come into play. Three aspects. Three specific trades, okay? First one in here, called a risk twist. This is a risk twist spread. The second trade of interest. The second trade of interest is what we call a gamma iron. This is actually a gamma iron spread, which is a very, very unique little trade. The third, okay, it's not third in line because this one's a big one. This third one is a VIX volatility spread. People, these three, those are your risk mitigation tools. Those three trades allow you, okay, to sell options. You're like, well, how? Okay, how? Let me actually display to you, right? We're going to go out in this example, and we'll call this the spiders again. Where are the spiders trading? Okay, where are the spiders trading? Right? And again, you can throw a number at me like what, 435-ish, you know, that's fine. So I just sold the 471s, but let's say the spies are trading 435. I'm going to go out and I'm going to sell 471 calls. I am simultaneously going to sell way out of the money. Let's say, let's sell like a 330 put. I mean, that's way out of the money. Forget about what you're going to collect. I don't care. On this one, you collect $1, which we just literally did. On this one, you probably collect over $2, okay? Because there's actually skew out there. Now, one interesting thing about here, I'm not just going to sell a call. I'm also going to sell a put. You go, but you're going to get killed. If the market crashes, you're dead. Market can crash all at once. Let the market crash. What do you think a risk twist spread is going to do? In the event of a market crash, the risk twist spread is designed to explode in value. We're going to put on a very, very small, okay, very potent risk mitigation tool. The market comes down quickly, the risk mitigation tool explodes in value. It is a volatility-based trade. The gamma iron condor is a lovely way to actually mitigate risks to both the upside and downside. The VIX volatility spread. What does a VIX volatility spread sound like to you? The VIX volatility spread by design, first of all, it's in the VIX. And if the VIX goes skyrocketing, the VIX volatility spread makes money. If the VIX goes skyrocketing, it must mean that the spiders are crashing. We use, okay, common offsets. Listen, we don't have to use these hedges in large quantity. A little bit of a dash of a hedge here, a little dash of a hedge there. You're doing trades that are going to have a 90 to 95% probability of making money, okay? Problem is, when we're wrong, we need to be able to keep the money. To do that, you're going to have to use risk mitigation tools. There's just no question about it. And I don't want you to think we're just going to go sell this and put one of these on. Listen, we're going to sell this and sell this. We could actually come over here and sell a few more calls and sell a few more puts. What happened if the marketplace rallied huge? Well, if I have a gamma iron on, the gamma iron, the risk graph, okay, actually is going to look something like this. So if the marketplace goes skyrocketing, the gamma iron is actually going to make money. Before you actually get to these calls, before you could possibly get hurt, you have to pass through your hedge before you could get hurt. What happens if the market crashes? If the market comes crashing down, the gamma iron can also help. You know, you also have a VIX volatility spread. What does the VIX do? Okay, the VIX will come skyrocketing up. Okay, it'll explode in value. And as the market's coming down, you're going to have to actually pass through, okay, a very profitable VIX volatility spread before you could ever take a hit on anything that you sold. Now, everything looks at this and thinks, it's a little complicated, it's a little complicated. It's not that complicated. Not if we told you which calls to sell, which puts to sell, which VIX volatility spread. How about this? You can just track our trades. Initially, many people do just that. They just track some of our trades, okay? That's selling premium. That's what Ultima Trades is really about. Listen, this is why you want to sell premium. Premium can now be sold in small accounts, even under 5K. In fact, what I just talked about a moment ago, you could do that with as little as $2,000. And it just drives everybody crazy. And I love to drive you guys crazy a little bit because people don't get it. Like, how can I do that in a $2,000 account? You can. There are new products that now allow you to trade this in small accounts. I got a better one for you. Can you sell naked options in an IRA? Does anybody have an answer for that? Can you sell naked options in an IRA? Anybody? Anybody? The answer is absolutely, unequivocally, yes. They changed the rules. Your brokerage firm may not allow it. They changed the rules. You can sell naked calls and naked calls, yes, with a little bit of margin. You have to have $5,000 in an IRA and you can do it, okay? And most people don't know that. And it just drives them insane. Like, how can I do this? How can I do this? They changed the rules like less than 2 years ago. And then they came out with new products to adhere to those rules. So now we can actually sell some premium inside of the IRA. We can sell premium in a regular taxable margin account. And you can do it with as little as $2,000 in a margin account, $5,000 in an IRA. Listen, this produces positive theta decay. It'll enhance existing positions. You know, some people are going to use these tactics, not necessarily, okay, solo. You can use this tactic and say, you know, I own a ton of Microsoft. I'd really like to learn the right options to sell against Microsoft. We can teach you that. Provides an incredibly high probability of success. You never need to buy or sell the stock. If you don't want to own stock, you don't have the capital for stock. Most people today don't want to trade stock. That's fine. And number 6, we didn't even talk about market direction. You could be wrong on market direction and still produce profitable trades. Like market direction, that ain't my thing. I'm a quantitative trader. I don't sit here all day and go, I'm so bullish, I'm so bearish. Oh, listen, the foreseeable future, you need this in your life. You can feel the market right now. Insane. And you look at a stock like Amazon, you're like, it's just fever pitch. Okay, ride it until you can ride it no more. Except the day of reckoning grows closer and closer. It's getting harder and harder to find, opportunities in a market. People are scared to death right now of buying stock. Why? You should be. You want to buy? Here, let's go out. Let's buy something. And let's buy it at the all-time high. Nobody's ever bought it at this price before, but you're going to be that guy. Nobody wants to get stuck with the hot potato. Hot potato, hot potato, hot potato. Keep moving, okay? Because eventually the music stops. Kind of mixed hot potato there and musical chairs, but you get the point. Listen, you've got to learn how to do this. And I'm telling you, you need this in your life. Selling premium is where it's at right now, okay? Selling premium can potentially bring in consistent returns, okay, while still mitigating and minimizing that risk, all right? You want to learn to sell premium, minimize risks the right way. We're going to discuss criteria here momentarily. Before I get into criteria, here are a few live trading examples. Now, in the live examples I'm about to show you, I'm about to show you one particular portfolio. This is what we term the Theo Theta, okay, portfolio. These are ultimate trades. I am going to show you literally 6 months of trades, right? Everything I've done in the first half of the year in this particular portfolio is included in here. Listen, variations of all the following trades that I'm about to display to you can be done with as little as $2,000 in a funded brokerage account. And it can also be done inside of retirement accounts, okay? First, I know I'm showing you a trade back here in November and December, of course, of last year. I'm showing this as the initial example. What I'm showing you here is this is Tesla. It's a short call, okay? This is the opening day of the trade, the closing day of the trade. The price that I open the trade, price that I close the trade, right? All of that's incorporated. I use limit orders only. The exact expiration, the strike price that I traded, okay? Whether it's a call or put, to open to close. Everybody understand? Okay? Where is this from? When you look at that, where is that from? This is a screenshot from Thinkorswim. So if I go to Thinkorswim and I actually cruise over to my account statement, let's open up Tesla. Now this is 25 days back inside of Tesla, okay? I don't want 25 days. I want to see everything for the last 340 days. Let's go to 340 days in Tesla, okay? I don't trade Tesla a huge amount, but the trade that I was just showing you moments ago, okay? It's here. By the way, I've done a bunch of trades in here, but the trade is literally right in here to open, okay, to close. There's the 950s, okay? Here's the 950s. There were other trades I also did around this. But to keep it simple, for the very first trade, I wanted to show you exactly where the screenshot came from. So you guys ready? Because we're going to go through 6 months of trades like that, and there's a lot of slides in here. Okay, starting with this Tesla short call. So I sold a call. What was Tesla doing last year at this time? It was rallying and rallying huge. Didn't matter. I still made 83% return on this. Next, I did another Tesla trade. This is another short call. What did I make on it? 90% return. Next trade, another Tesla short call. And again, I'm just trying to get you warmed up, okay? 58% return. Now, timeout. Timeout! At the beginning of the year, the very beginning of the year in January, we decided to start tracking a TheoTrade portfolio. TheoTrade portfolio is everything we do here in terms of ultimate trades. It's a premium selling portfolio. You can track every single trade along with me. This is bonds. You may not be familiar with bonds, but it's one of the reasons that, well, you're here to learn. So bonds, short put, what did I do? I sold the bonds for 14 ticks, bought them back for 6 ticks, 57% return. Bond short put, 53% return. By the way, one thing you're going to see about me, I trade the same crap again and again and again and again. People sit there and they search for stocks for their like whole life. I must find the next AMC. I should go to the Reddit board. Okay, because a guy living in his mom's basement knows the next stock that's going to be there. Seriously, that was actually that was not just my comment of a guy living in the mom's basement. One of the guys that had to go testify in front of the Senate Oversight Committee lived in his mom's basement. You know, Mom, meatloaf. It's unbelievable. You can't even make this stuff up. Trade the same products again and again. Does it matter what product you trade? As long as the product's viable. Here's bonds, 57% return. Here's another bond short put, 53% return. Here's an IWM short call. The IWM, the Russell. The Russell, 62% return. Hold on a second. 53% return. Okay, now we're still in January, right? Tesla short call, 76% return. SPY short put, 60% return. SPY short put, 50% return. SPY short put, 51% return. SPY short call, 57% return. SPY short call, 49% return. Time out. How many contracts do you want to do? You could do a one lot. If you did a one lot, you're not exactly making a lot of money off this. Making 60, 70 bucks. I guess that beats, nothing. But you could do 10 contracts. 10 contracts, you're going to be able to yield a whole lot more. But it's a 49% return on your money inside of what? 3 weeks of time? Look at this. SPY short call, 50% return. Look at the time frames on these. I'm not holding these for long periods of time. QQQ short call, 62% return. But still my heart, I held that one a full month. Oh, okay. QQQ short call, 53% return. QQQ short call, 50% return. QQQ short call. By the way, yes, these are all different. I am actually scrolling through. These are the, if you watch carefully, this is the 375s. Then I did the 385s. Then I did the 390s. 50% return, 50% return, 50% return. Then the QQQ short call, 355 call for a 64% return. Ooh, I had to hold that one almost 6 weeks. Here's another QQQ short call. The 360 calls, 53% return, 57% return. Okay, IWM short call, 56% return. I am showing you every single trade in this portfolio. IWM short call, 50% return. IWM short call, 54% return. We took a 19% loss. Okay, I just wanted to show you that because somebody inevitably comes in here. Is he going to show me a loss? I'm showing you a loss. That is the only short option I took a loss on in the first 6 months of the year. The only one in this entire portfolio. And again, that portfolio is tracked. It is sound. I can provide anybody the details of that portfolio because the entire thing is on a spreadsheet inside of TheoTrade. Took a 19% loss in this one. I opened it, I closed it for a 19% loss, which is an absolutely negligible loss given the fact that every other trade's at a 50% gain. Here's an IWM short call, 54% return. QQQ short put, 52% return. Now we're getting into March. We're moving. IWM short put, 49% return. IWM short put, 47% return. QQQ short put. So far, timeout, you've seen Tesla, the only stock you've actually seen. You've seen the bonds, you've seen IWM, you've seen QQQ, you've seen spiders. What else have you seen? Nothing. Why? The indices have been good to me. QQQ short put, 51% return. Bond short call, 50% return. The return to bonds. Okay. IWM short call, 54% return. IWM short call, 51% return. 50% return and another short call. And again, these are all different. This is the 265 strike. This is the 275 strike. Okay. The SPY short call, 50% return. IWM short call, 53% return. On short put, okay, 50% return. Time out for 1 second. So now we're coming towards the end of March. Are you seeing any consistency in here? What am I trying to get for a return? Okay. All right. Because by the way, not one of these, okay, is an example. These are all live. These are all live trades that we did. The way, if you want to see the bond trades, people are always curious about bond trades. ZB. I love me my ZB. I've had 29 fills. That's just 340 days, 29 fills. And you can see every position, both the open, the close, to open, to open, to open, to open, to close, to close, to close, to open, to open, to close, to close. There's some strangles in here too. It's get crazy because I've actually opened a lot of bond positions in the last few days. Okay, you can see every one of them, 50%. IWM short call, 51% return. Okay, short put, 50% return. IWM short put, 52%. IWM short put, 52%. Bond short put, 53%. Bond short put, 73% return. Bond short put, okay, 59% return. Bond short put, 56%. IWM short call, 52%. IWM short call, 50% return. IWM short call, 51% return. Are you getting bored yet? Here's a Mo short put. Look, stock. Actually, this stock had pretty good action in it. 53% return. Bond short put, 50% return. Bond short call, 50%. Tesla short call, 53% return. Okay. QQQ short call, 54% return. Amazon short call, 63% return. QQQ, 50% return. Q short call, 53%, 51% in the QQQ again. We're getting a little bit more to the present here. QQQ short put, 50%. QQQ short put, 55%. SPY short put, 51%. SPY short call, 54%. Wait, we're going to change something in a minute. 50% return in SPY short call. SPY short put, 52% return. ES short put, aha! At this point, okay, after about 5 months of P&L, okay, a lot of clients said, why don't you really amplify your returns? So I did. I was trying to keep the portfolio nice and light, nice and fluffy, but a lot of clients wanted us to amplify returns. So an ES is the options on futures contract for a 50% return. Here's another ES. And by the way, these are different trades. This is the 3110. This is a 3000 short put, 50% return. Here's an ES short call, okay, 4540 for a 50% return. You realize now this is a big boy product, okay? One SPY, that's worth 5 spider contracts. This is actually a sizable trade. ES short put, 51% return. QQQ short call, 51% return. ES short put, 51% return. Okay, 50% return, ES short call, 51% return, ES short call, 56% return. Okay, bond short call, 53% return. That's it. Okay, I gave you the full first half of the year. Everything else right now, I currently have on and have open. I mean, we just came through the July 4th holiday, but I wanted to take you literally from, January into literally the trade right now. And that's just one of several portfolios that we actually run. But this is the Ultima portfolio. This is the premium selling portfolio. Obviously, bonds, ES. Listen, you may not necessarily be familiar with those products. Make you familiar with the products. What you trade, it shouldn't inhibit you just because you don't know what a bond is. It shouldn't inhibit you because you don't know an options on futures contract. You never, ever have to trade those contracts. Okay. Why do I? Because there's great upside to trading some of those products. Listen, what better time to learn a skill set, okay, that's going to last you a lifetime. If you're still working, people look, this is really hands off. I mean, if you didn't see the consistency in there, okay, by the way, somebody said that these trades are all done in a live account. They're absolutely done in a live account. This is the live account. This is live. Okay. How do you know it's live? Well, it's live. Okay. And when I say how do you know it's live, if you actually look at like a monitor tab, the P&L and everything, it's live. Okay. We have many a live account and we actually track the accounts separately. I also have an IRA in here. This is something you can't do in paper trading to show both pattern day trader, which is an IRA account, pattern day trader, and my portfolio margin account. You need not have a lot of capital in your account. I don't want you to to believe that you have to have a lot of capital in your account because $2,000 and you can still start and sell some premium. Some of you, if you're still quarantined, okay, this is how to emerge stronger, okay, and in great financial shape. And by the way, somebody popped in here earlier, was chatting with us from Australia. They're still quarantined, in areas in Australia right now. So if you're still working, again, I want you to realize this is hands off, and many of the order types we use, okay, are very, very hands off. You can actually use good till canceled orders to close these positions. Listen, what our members are saying. Michael Phipps, want to thank Don Kaufman and TheoTrade for doing a great job. I just threw that one in there today because, well, that was actually a comment made today. There's a comment made a few days ago. Stefan, I really think that Theo is the best educational money I ever spent. And Ali, this is towards the beginning of the year. Don helped me pay for 1 year of TheoTrade subscription for QQQ. Just a smattering of some comments from our clientele. Okay, no time, not a lot of problem. As I said, every trade that we're showing you today is extremely hands-off. And all the trades that we're doing here, these were displayed live at TheoTrade. And I want you to realize, again, the executions that we're doing, okay? And I'll use a couple of different brokerage platforms. Take a look at the messaging here, okay? You can see filled. By the way, they don't do that in paper trading, do they? All of these. I'm showing a couple of one lots and so forth, but some of the trade actions, some of the bond positions I've done in the last couple of days, you get to see everything. And when I say everything, it's the full Monty. Listen, selling premium, ultimate trades is completely hands off. This is set it and forget it order types. Even a fraction of your time is going to be enough to see results. A couple of characteristics of selling ultimate premium. Listen, the attributes are undeniable. Like you never have to buy or sell the stock. Okay. Risk, risk can be fine-tuned, tailored, if you will, to your comfort level. You're never going to use a stop order. You don't need to use stop orders. I don't want you to believe that you're ever going to have to use a stop order. I'm very much anti-stop orders. Okay. You can also vary time frames to help further minimize your risk. That's actually going to something I have to explain a bit more in depth. Probability of profitability is high. You know, when you're doing ultimate trades, when you're doing trades like this, 95% of the time you're doing nothing. Okay. You sell premium, you put your risk management tool in place, you don't do anything. Okay. The other 5% of the time you're like, whoa, 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 market's getting a little crazy here. Okay. So what do? You have your risk management tool in place. Okay. And it works. Okay. And you pull some positions off. And I'll tell you right now, you saw a 19% loss that I took on a position over there. That's going to be par for the course. I want you to recognize, yeah, they're high probability trades. When you're wrong, we got to mitigate some of the exposure. This is the perfect strategy to enhance one's portfolio, but it's also an excellent tool, okay, to hit returns to be able to build an account, right? And as I said, selling premium, you're hitting singles and doubles, but it's just hideously consistent. I mean, just deadly consistent out there. And I call it like hideously consistent to the point of madness when you're watching my portfolio. 50% return, 50% return, 50% return. If you didn't pick up on it, 50% return. And I'm like, oh, that's hideous. Look away. Okay. But that's part of it. You've got to get consistent to the point of absolute sheer madness and boredom. Okay. This business should be that way to you. New products allow for the sale and options in nearly any account size. And that's something I've just been harping on. Listen, building a portfolio of options, do not let options portion of this intimidate you. Selling premium can be done for minimal credits and minimal risk. However, the sale of premium, okay, is like, this massive power tool. If you know how to use, right, a chainsaw, it's going to be the quickest way to cut down a tree. If you don't know how to use a chainsaw, it's going to be the quickest way to lopping off a couple of fingers. Options are the exact same thing. Options are going to be the quickest, the fastest, the safest, the easiest way to get to where you want to go in the stock market. But if you don't know how to use them correctly, you're going to lop off a couple of fingers. I don't want anybody to run out right now and go, I'm going to sell some premium right now. I'm going to follow his trade. Because you have to learn, okay, what? 3 risk management tools. You got to learn the risk twist. You got to learn the gamma iron. You got to learn the VIX volatility spread. And yeah, there's a little bit of work involved. Okay, with that little bit of work, okay, and watching some of our trades, you'll get this stuff. Listen, you can sell Ultima Premium and minimize risk. Maybe you don't know a lot of options. Again, don't let that portion intimidate you. We can get you ramped up. You need these strategies though for the foreseeable market future. We can show you how and we can show you when to sell premium. It does take a matter of a few hours. TheoTrade creates detailed recipes for every strategy, including selling premium. And I always use this analogy, but you wouldn't go out and bake a cake without a recipe. So why trade without one? And that's what we provide here is just that. It's a recipe, it's definitive, it's criteria, it's to get you prepared, right? In entering and exiting and managing these positions. Look, this is what you need to successfully sell Ultima Premium for a living. First, what underlying stocks or indices make the best Ultima Premium selling candidates? Like, what would you use for an Ultima Premium selling candidate? You're like, I could use this, I could use this, I could use this, right? You just saw spiders, IWM, QQQ, bonds. What else could you use? Okay. Well, what volatility should you seek out? Volatility defines a lot of what you're going to do. I'm going to say that again. The volatility defines very much of what you're going to do in here. What options expiration do I select? Let's throw that one up there for a second. So I come in here, forget the bonds for a second. I come in here and I go, let's actually go to the mother of all products, the SPX, the most intimidating product in the entire marketplace. Say what you will about this business, but the SPX, it is the beast. Okay. This is the Widowmaker, a $4,300 product. Look how many expirations there are. Just from 0 to 55 days out. Okay. There's like 24 expirations. Okay, you start going further out in time. There's 100-day options and AMX options and PM options and 71 days, 72 days, and 85 days and 99 days. Set, hut, hike. You have no idea what expiration cycle. What if I told you? You better know exactly what expiration cycle. To the day, people. Pinpoint. AM settlement. I'm going to tell you right now, that's a no-no. You don't use AM settlement if you're ever going to trade that product. Okay, or you're going to die trying. You got to like not only know the volatility, you got to know the expiration. After the expiration, you got to know the option delta to sell. What if I told you we give you an exact delta? Literally, we'll say these are the delta parameters to sell within. You go outside of it, you're on your own. I mean, that's like, it's like baking a cake. It's going through a recipe. You're like, I don't have vanilla extract, so I'll just put some vodka in there. That cake is going to taste like crap. You're going to have fun though doing it. Okay. But I'm telling you, you need to know exactly what options to sell. Then you need to know what options to buy against your position. That, people, is called the hedge. Okay. What options and how do I build the position? When you say how do you build a position, this is not about putting on one trade, putting on one hedge. You can actually put on a whole bunch of positions and have one hedge. Kind of nice. Like you don't need to go out there, and you can go out there and sell a bunch of stuff. One nice basket hedge, hold me, and the hedge will be there for you. Okay. Do I need a large amount of capital in my account to do this? Absolutely not. You don't need a huge amount of capital. I've been talking about that the entire time. And if you've heard me mention, you do not need a lot of capital for the 20th time, it's because you don't need a lot of capital. They changed a lot of the rules and everybody missed it. There's still people arguing about the day trading margin requirement. Why? It's archaic. You could just circumnavigate the day trading margin requirement if you know what you're doing. What is the right amount of risk for me? We help you answer that. If you have a $10,000 account, if you have a $1 million account, you should be able to fine tune the right amount of risk for you. We'll help you answer that question. What are the percentage returns supposed to be? Let me guess, 50%. Okay. How do I protect myself from market crashes when selling options? 3 aspects: gamma iron, risk twist, VIX volatility spread. We teach you how to do those 3 things. Let me show you exactly what we do here at TheoTrade. Okay. TheoTrade creates recipes in trading, right? When I say recipe in trading, like recipe doesn't go far enough, right? What trading is and what the recipe breaks down to is ultimately, this is like a pre-flight checklist. I mean, they're checklists, okay? And the checklist idea is literally like, if you got into the cockpit of a 737, you're not just going to, throttle up and take off. You go through a highly detailed checklist. We're going to take you through literally step by step. When I say step by step, criteria: step 1, step 2, step 1. I'm going to tell you what step 1 is. Check the liquidity. Step 2 has a lot to do with bid offer spread. Step 3 has a lot to do with volatility. We get to the deltas and so forth. Every little nuance is going to be covered for you just getting into the trade. But getting into the trade, that's the same as the pilot takes off. Well, great. Then what does he do? Okay. Then he sits there. He's like, oh, things are getting a little wobbly up here. Listen, most of the time, nothing happens. 5% of the time, though, you're going to have to manage the position. Think about that. Once you're actually in flight, once you have your position on, then we give you different variables. What if the market goes up? What if the market goes down? If we crash, if we stay flat? Every variable, the and, or if, what can happen to you? I'll tell you exactly what can happen to you. Trading is about answering the what ifs. This is what our criteria does. What might be a good stock ETF candidate? What's the correct option expiration cycle? How much capital do I commit? What option prices do I sell? What strike price options do I buy? How can I actually limit my risk? TheoTrade has the answers to those questions. Again, we build recipes with definitive criteria, checklists for each strategy and each unique variable you're going to encounter. TheoTrade is the answer to your questions. We'll give you the right probability, how many option contracts for the account size, when do I close, okay, your premium sell? What if the stock sells off big? Do you bail out of the trade? What if we rally massively? Can I fix a losing position? It's about how, when, why, at what price. That's just the beginning, though, of the variables that you're going to face while selling Ultima options for a living. You can read, and again, you could probably Google right now what selling options premium is. You can Google selling options premium, and you would probably get 10,000 pages on a Google search. Okay. That's all well and good. Okay. But you might even know how to build a free few trades yourself. That's not what we're here to do. We're not here to tell you what selling options premium is. We're here, okay, to give you criteria, right? You need TheoTrade's recipe for success. 20 years plus of trading experience, access to client order flow for 15 years, viewed and studied millions of trading accounts. I ran education for 15 years for both Thinkorswim and TD Ameritrade, okay, which at the time we had the largest option order flow in the entire industry. That's just myself. And by the way, I want you guys to know, TheoTrade is not just me. We have 7 other full-time instructors, many of which that actually came from that Thinkorswim TD Ameritrade world, okay? You need these recipes for success. Criteria is your recipe for success. The following strategy, Ultima premium selling, and the corresponding criteria requires the utmost attention to detail. Okay, we have spent years, literally years, fine-tuning this trade setup, the criteria. And when we approach the section on criteria, you follow the steps to be able to build a trade. Okay, we built a 5-hour course specifically for Ultima income generation. It's called the Ultima Income Generator course. Okay, before anybody goes, oh, it's another class, it's $500. Okay, bear with me for a moment. We do not here at TheoTrade go out and sell a la carte classes anymore. Okay, we did for the first year we were actually in business. Okay, we've been in business now since 2016, right after I left TD Ameritrade. Okay, obviously it's 2021. We provide you everything that you're going to need to trade, to invest, okay, and to succeed in this business. And I'll explain exactly what that means here momentarily. But I want you guys to know right off the bat, we're not here to push another course at you because, you know, there's firms all day long. Okay, before I even describe this class, there's firms all day long. Literally, they sell a class for 500, then they sell you an indicator for 500 that goes with the class. Then you have to take another class to learn how to use the indicator that you already bought for $500 from the original class. Then they have another class for $500. You have to buy another indicator for $500. It's absolutely ridiculous and archaic. We know this business, okay? And we will do everything in our power to help you succeed in here. And I'm going to show you that in a moment, okay? And I'm just going to tell you right off the bat, stick with me for a couple of minutes because as I go through and tell you a little bit about both TheoTrade and the Ultimate Income Generator course, I want you to know right now, you can email us for support, okay, right after this. When I say email us, one-to-one support. If you need some help, okay, after going through this course, you're a little bit confused, you don't even know where to start, I need to learn how to sell some premium, okay? Hey, listen, I have a $5,000 account, I'm nervous, email me. I'll directly respond to it. And when I say directly, yes, it is me. It is not a figment of your imagination or somebody that works for us. We answer emails, okay? We're here to support people, you know, in a one-to-one kind of environment, or if you're more comfortable in the chat room, ask questions, you know, in a chat room. Then again, there's, you know, 2,000 people a day inside that chat room. I'll explain that here momentarily, that what you get here at TheoTrade, okay, you couldn't buy for any amount of capital in any other, you know, educational venue. Bottom line, okay, there's nothing, okay, on par with what we do here. And I'm going to show you that again in just a moment. The Ultimate Income Generator course. I am the trade instructor. This course, it's ready to go. We just held the course only a couple of weeks ago. What we do is we do a course, okay? We clean it up, cut out all the ifs and or buts, okay? We package it. It's a 5-hour course. It is archived. It is available immediately for streaming. You can stream 24/7. You also can stream to any mobile device if you so choose. For instance, if you have an iPad, if you have, you know, any Android device, we stream to them all. I bring this up. We actually build an app specifically for TheoTrade. We have both for iOS, which of course is Apple, and Google, which is your Android. So if you're into mobile, you can stream to mobile. If you much prefer to stream off of your main computer, that's fine. On mobile, you can even download. You could be at 30,000 foot in an aircraft, not even attached to the internet, and you'll still be able to stream our program. Okay, so be aware of that. The class slide deck that includes all of the entry and exit criteria specific to Ultima Trades is available immediately for download. Okay, that is the Ultima Income Generator. Now, again, bear with me for a moment because I want to give you some of the course curriculum. Then we're going to go in, and again, I'll discuss right now. Listen, what you get here at TheoTrade is not just an Ultima Income Generator course. We're going to support you in every way, shape, or form. Okay, I'm also going to get you ramped up. If you know nothing about options, because some people are already asking the question, if you know nothing about options, okay, we will walk you through the absolute basics to the extreme. So hang with me for a moment and I'll show you all of that. Here is the curriculum, all right? This is the course curriculum for selling Ultima Premium. You're going to learn how to generate consistent returns with selling options. You're going to learn how to build a portfolio, okay, high probability trades that generates consistent monthly returns regardless of your starting capital, okay, or experience level. You're going to get detailed entry and exit criteria for selling options, which is exactly why a lot of people come here. You know, people have sold options premium, made money, taken a big hit. They need the criteria. You already understand premium selling. You need the criteria. You're going to talk a little bit about the option Greeks in here and learn how to manage all of your positions through one easy number. Then we're actually going to get in. We have an entire section in this course. Absolutely love when I put together the Ultima course. It's actually one of my favorite courses that I've ever built here. You're going to learn to use a risk array. The risk array is like one of my favorite things in order to visualize profits and losses. You're never going to be surprised by what the market can throw at you. The market sold off 20%, 20% in the market. You'll actually know exactly what your P&L is. We actually give you all of that inside of the risk array. Very few people know how to use a risk array. Okay, you're going to learn how to properly allocate in a way that reduces risk, okay, and allows you to minimize any risk in your portfolio. It's really hands off. You can look at this like on a, you know, on a Sunday afternoon and say, this is my risk for the week. This is what I'm thinking of doing. You're going to discover risk mitigation techniques designed to hedge even the most extreme market environment. That's where I'm talking about. VIX volatility spread, the gamma irons, risk twist. There's an entire section in the course for that, and how to sell premium in small accounts. There's a whole section for small account. Okay, if your account is $2,000 or $5,000, retirement accounts as well. Retirement accounts count. You're going to learn to use innovative new trading vehicles that have never been available before. It is very, very new. Okay. On top of all of this, TheoTrade is completely riskless trade, 90-day money back guarantee. And I put this up here right up front. And you're like, I don't even know what it costs you. It doesn't matter. Okay. It's completely riskless trade. Money back guarantee. If you're not satisfied in the next 90 days, just email us, support@theotrade.com, receive a full refund. This is, as I said, like everything we do here is no holds barred. We trade live with you. We let you see our accounts. When I say we, okay, there's 7 other full-time instructors, as I mentioned, and I'll show you them in a moment. Okay. And if you're, you know, if you're not loving it for any reason, we want people here at TheoTrade that want to be here at TheoTrade. You know, we built this education, okay, company in this business because there's so much crap out there. I watched it for 15 years, the brokerage firms. Okay. You want to learn this business. As I say, you can go out and you could spend $30,000 on an education and you're getting nothing compared to what you will get here at TheoTrade. And you're going to be shocked. We give you, again, a money back guarantee. There are no stipulations to it. You do not have to email us and go, my dog's wife, sisters, uncles, you know, brother. Yeah, somehow the dog's wife, sisters, uncle, brother doesn't necessarily work for you, but there's no excuses, no questions, no commentary. You need to know now. Okay, just email us. If you're not happy in the first 90 days, just email us. Ask for your money back. We give it back to you. And again, emails. You know, you don't have to call us, do a little song, you know, a little dance, make a little love, get down tonight. Forget all that stuff. Money back guarantee for 90 days. Go to theotrade.com/SKU. Okay. Then by the way, that's S is in Sam, K is in Kit, E is in Echo, W. TheoTrade.com/SKU. Go to that right now. You can enroll for TheoTrade. And again, I'm going to go through all the different aspects of TheoTrade. And I want you to know right now, TheoTrade is not just about this premium selling course. We have everything you're going to need in this business. Let's go through it. Here's a bonus, okay? And some of the bonuses today. TheoTrade, as I said, goes beyond one class or one indicator. You want everything to be able to trade, invest. You want it at one place and one price. First, bonus number one, we have a quick start beginner guide. If you've never put on a trade, you've never been in the business before, we take you from absolute novice and work your way up. And I want to bring this to your attention right here, right now. Let's actually bring it into scope. Okay, welcome to TheoTrade. This is TheoTrade. We have the Start Here menu. Okay, what is the Start Here menu? Options 101, Options 201, Options 301. Okay, order execution part 1, 2, and 3. I'm going to tell you right now, some of you are experienced. You still need work on your order execution part 1, 2, and 3. These are a couple of the classes that I have specifically done. Not every class in TheoTrade is, again, me, but these are some of the classes that I've put together. The order execution alone, no matter how experienced you are, okay, I guarantee you is going to shock you what you learn in those three little parts over there. Okay, that alone is worth the cost of TheoTrade, which I will discuss here in just a moment. So there's a Start Here menu. That's bonus number one, Start Here. We take you from novice. Please, if you're new to this, don't panic. Like, watch what we have to offer. And there's no risk to you, so don't panic about it. Bonus number two, we give you every trading class that we've done since inception of TheoTrade. How about that? Okay, you go, what does that mean? We've done over 100 courses since we started TheoTrade, going all the way back to 2016. Every class, every archive, everything. As I said, we didn't build TheoTrade to be like, pay $500, pay $500. Come on, dangle the carrot, pay $500. It's all encompassing. Everything that we do and everything that we are, you get it from day one. I'm going to say that again. Everything that we are, everything that we do, every course that we create, it's yours. If you're with TheoTrade for the next year, you see everything that we do over the next year, and you see everything retroactively. We literally built Netflix for traders. Okay, every genre of trade, premium selling, I love it. It's for me. It is for me. Okay, I mean, I built the premium selling course here. Maybe somebody here wants to trade NASDAQ futures. Guess what? I got a guy for that. Maybe somebody here wants to know more about Fibonacci's. Guess what? I got the Fibonacci guy for that. Cyclical analysis. I got that guy. Okay. I got Jeff Bierman, who's actually a professor of finance at Loyola in Chicago. You can pay 42 grand a year for Jeff Bierman, or you can get him here at TheoTrade. That's who builds these courses. We have a professor in finance. We have another gentleman named Brandon Chapman. Guy wrote the book in options, literally wrote the book for all of TD Ameritrade. We brought him out of TD Ameritrade as well. So in bonus number two, you get access to every course that we've done. Guide to small account growth with in-out spreads, surviving and thriving in extreme volatility, volatility back spreads. Again, you can go out there and pay $500 for courses. You don't do that here, okay? Somebody says, I'm going to belong to TheoTrade for a short amount of time. I'm going to binge watch the classes. Go to town, man. Binge watch them. It's designed for, okay? Watch away. This is actually a whole class on risk twist spreads. Like one of the most prolific classes. How to collect income being short. High probability spreads. There is an iron condor class in here. Day trading NASDAQ futures, covered calls. Somebody comes here, I just want to learn covered calls. Cool, you learn covered calls? We got a class for you. Pairs trading. Okay, I don't even know what pairs trading is. Good. You can learn that here. You can learn about futures, options, you name it. Every genre of trade. That's bonus number two. Okay. Bonus number three. By the way, you know what? In bonus number two, there's one other aspect I want to show you. Want to see what bonus number two really incorporates? These, okay, are the classes. There's over 100 courses. For instance, option strategy. Let's click on option strategies. This is going to show you, okay, every course that we have available here at TheoTrade in terms of options. Ultima income generator, tracking unusual options activity, gamma irons, okay, controlling risk, back spreads, volatility course, black books, okay, extreme volatility, maximizing edge, trading earnings. This is another one of mine. This is a big one too. Guide to maximizing edge, trading earnings. Earnings trades are a little tricky. Love that one. Selling options for a living. Okay, fruit fly. That's just a smattering of some of the courses. You'll wait, what? Yeah, you get access to them from day one. Like today, you can start watching the courses. All access TheoTrade VIP membership pass for free. This is 3 3 months access to everything we do in terms of the chat room. One aspect we did not mention about TheoTrade, we also have a chat room. Here it is. Okay, you want to see the chat room in all of its glory? It's live now. It's live 6.5 hours
I
every
guess
single day.
SPY, but spiders, and I'll do some option trades
This
and
is
some things
Corey
back and
Rosenblum. He
forth
literally just came on.
with respect
What
to
is
the
Corey
spiders.
doing? He's in his trading account. You
So
can see everything he
that's what
bought
we'll
and
talk
sold
about in
throughout the
today's
course of the
session. But
day. He's
first,
talking about all his individual trades. Sorry, I just turned them off because you can hear him in the background. Okay. But you can see everything that we're doing. By the way, on top of that, we can show this, and it's probably one of the coolest portions of it. You can actually talk to all the other clients in here. We post trades throughout the course of the day, post archives. It's all in here. And again, any given day, there's over 2,000 clients. We have 6,000 people on TheoTrade. In any given day, we have 2,000 people at one time live within our chat rooms. Now, the chat room, it's not just about real-time, market insights. You as a trader never have to go into our chat room. You don't have to, because we'll actually text out trades. We do push notification and text trades. Okay. If you can't get a text message because you're in, for instance, Singapore or Australia, we do push notifications through our mobile application. We do continuing education, which is daily coaching sessions. Like another $1,000 of support trades and insight. And last but not least on this page, and something that I press you for this, okay? Our instructors answer your trading questions via email. Any of us, without an equivocation, okay? If you're with TheoTrade, we answer your questions. You can't call up Charles Schwab anymore and go, "Am I doing this trade right?" They're gonna laugh at you. Dude, I have no idea. I'm just here to answer the phone. You don't have anybody anymore to be able to talk to you about trades. That's what we're here for. Bounce ideas off of us. And by the way, almost all of our individuals that work here at TheoTrade are former, okay, Series 7, Series 24. Most of us actually do come from the brokerage, okay, or professional trading world. I myself have had a Series 3, a Series 4, a Series 7, a Series 24, and my Series 66, which is what is it, is a 60, 63, and 65 combined. You want fries with that? By the way, I've also passed many of my Canadian securities regulatory tests, my Australian test, and had I stayed, I would have even passed Singapore. Okay, I have, you name it, I am licensed in it. We know how to answer questions on email, and you can actually probe us with direct questions. You don't have to go, "My dog did a trade. Hypothetically, what do you think?" I don't care if your dog did a trade. You did the trade. Okay, come out with it. People still email me all the time, like, "My friend did this trade." Okay, we answer your questions. Again, that like, what is that worth to you on a yearly basis? Thousands. Okay, if I can answer one question for you, get you out of a tough spot, it's worth thousands. All right. These are your TheoTrade instructors. As I had mentioned, Jeff Bierman, analyst, trader, and former chief market technician for TD Ameritrade. Jeff Bierman helped build most of the Thinkorswim charts. Over half the studies in Thinkorswim charts came out of Jeff Bierman's head. One aspect also, he is a professor of finance at Loyola and moonlights on the side. Matt Williamson, market neutral and premium selling options strategist. Corey Rosenblum, he's our senior strategist and a resident swing trader. This is a shorter term trader. This is somebody that's in, out, and within a few days and on with their life. Corey Rosenblum also happens to be a CMT, as well as Jeff Bierman is a CMT, and Brandon Chatnam is a CMT. We have 3 CMTs on staff. You realize how hard it is to get that designation of CMT. Okay, that is a rough test if anybody's ever taken it before. We have 3 of them. Most major brokerage houses only have 3 on staff. We have 3 in a group of 8. Okay, then we have again Brandon Chapman, as I was saying. Brandon Chapman also comes from the TD Ameritrade Thinkorswim world. He actually wrote the course manuals for all the education at TD Ameritrade. That's the guy that actually wrote the course manuals. Steve Miller, Slim, actually spent over 43 years thus far in this business, stock options and futures traders. By the way, Slim Miller is also our resident psychologist here, which we do have trading psychology courses incorporated in TheoTrade. I'll discuss that momentarily. Tony Rago, NASDAQ futures and intraday strategist. Tony just trades NASDAQ futures all day, just calling setup after setup after setup after setup in the NASDAQ. Last but definitely not least, Blake Young also comes from Thinkorswim TD Ameritrade, market profile, futures, currency, and commodity trader. Blake has also managed significant amounts of money in the past. We were looking forever for a market profile guy, for those of you that trade futures. This is your guy. This is Blake Young. Here's actually just a quick picture. We got together on Zoom more recently, took a quick snapshot. Everybody's scattered all over the world these days. With that, on top of it, we give you access to 59 proprietary indicators and scans. So we give you access to what? A start guide. We give you access to the Ultima course. We give you access to every course that we've ever done previous to that. We give you access to all the chat rooms, everything there. Now we're actually giving you access to any proprietary indicators that we use. The auto expected move, okay, I'm going to give you guys that link here momentarily. Again, the auto expected move, I'm going to give you the link for auto expected move. We have Quantix, NQ levels, next generation squeeze indicator, position trackers, IV rank versus percentile, still just skimming the surface of some of the proprietary studies that we have, okay? We have people building more scripts for us, okay? It's over $1,800 in indicators and scans alone. Bonus number 4, TheoTrade Live Portfolio, okay? Live trading instructor is me. The new positive theta portfolio, it's Ultima premium selling. It's a no holds barred trading approach. You can see everything, right? What I'm actually showing you here, we give you full disclosure on all trades that I do, opening, closing, and hedging positions. You get to watch me discuss every position like never before, okay? We also do a Theo Theta small account portfolio, which in an effort to help people that have, for instance, $1 million, $250,000, or for instance, a $3,000 portfolio, cover the entire spectrum. So we have portfolios built, okay, that you can not only track, you can trade with us. We are shooting you out text and push notifications on the Theo Theta portfolio. This, as I said, this is what it looks like. And this is a screenshot I literally took today, okay? Here's all the trades that we put in here, okay? Opening positions, closing positions, all right? Now, obviously, everything that's more recent is open, 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 open. I've been firing the last couple of days into this. On top of it, again, I know some people like they're listening to this like it's too much, okay? How about if we broke everything down into a 12-minute video once a week? When it comes to premium selling, every Friday morning, I break it down in 12 minutes. Okay. This is an infinity, okay, and Theo Theta portfolio update. What that basically does in 12 minutes, it incorporates any changes I've made in the portfolio. Okay. And it helps you understand why I'm doing some of the things that I am doing in the particular portfolio. So it is a weekly Theo Theta, okay, or Ultima trading portfolio. Theo Theta is what we kind of call premium selling. Okay, moving onward and upward from here. Everybody okay at this point? And by the way, there's lots of questions coming in, and I'm going to be able to answer those questions here momentarily. Bonus number 5, technical analysis toolkit. We're not just about options and premium selling. Okay, we have some of the great market technicians working for us. Technical analysis 101, 201, MACDs. Okay, technical analysis and charts is your thing. This is the place to go. Bonus number 6, day trading. Can't say that one. Day trading treasure chest. Tongue twister. This is actually Tony Rago, along with Corey Rosenblum, where they get into highly detailed aspects of intraday setups. This is for people that want to sit in front of their screen, that do want to trade throughout the course of the day. We're actually giving you all of the day trading courses as well. Number 7, mindset mastery. This is huge, probably one of the more prolific courses also done here at TheoTrade. Listen, each and every one of you, okay, watch this course, change the entire way and your whole perspective of the market. This is a course, okay, about psychology and your entire way and approach to the marketplace. The course is actually done by Steve Miller. It's the 5 essential building blocks to successful trading. I'm telling you, write it down right now. You'll forget, okay? 5 essential building blocks to successful trading. The course is well worth. I'm gonna tell you right now, you can go through, you would have paid thousands for that one course alone. Every single person that goes through that course, like changed my whole outlook on the marketplace. It's the most wonderful course I've ever taken. And I'm telling you, you're gonna feel the exact same way. Number 8, quick start guide to Ultimate Trades. So you've gone through, and you've seen a lot of material here today. You're like, where do I start? You want to sell premium with a quick start guide. It's literally like a PDF, which is a quick start manual, like anything that you buy that's, Even like iPads now have like quick start manuals. How do you get that thing up and running immediately? That is exactly what the quick start guide is doing. Okay. What our members are saying, this comes from Jeremiah in March. My first 4 trades following exactly the details in your Ultima class just closed out using GTC, which stands for Good Till Canceled orders, set right after getting into the trade. This paid for your class in less than a week. I'm very thankful I subscribe to your services. Keep up the good work. Thanks, Jeremiah. Okay. Listen, TheoTrade includes everything you're going to need to invest, to trade. We do classes and coaching and email access to the instructors and a live trading room and indicators and scans and mobile access. Everything. I mean, literally what we built. I mean, TheoTrade built the Netflix for traders. I mean, you name a genre of trade, and we've got an avenue. $297, okay, for 3 months. I want to be really, really clear about this before I cover everything again. Okay, it's $297 for 3 months. Few things. Number one, this is not a subscription. It is again, make this clear. This is one time. I can't write with this pen right now. Okay. This is a one-time charge, $297 for 3 months. What do you do after 3 months? Pay $297. What do you do? Pay $297. Okay. This is not an introductory rate. As I said earlier, you can go out and you can spend $30,000 in education. Okay. And what you're going to get is going to pale in comparison to what you're getting here at TheoTrade for $297. And it's completely riskless trade, right? So it includes the Ultimate Income Generator course, access to over 100 trading classes. There's new monthly classes. By the way, there's a lot more. I'm about to unleash a couple more classes. There's a live trading chat room where we're providing real commentary, real trades. We're broadcasting 6 hours a day. Everything is archived. We give you the indicators. We give you text push notification. We give you access to the portfolios, daily coaching sessions. Okay. And again, we answer your emails. If you go to theotrade.com/SKU, just to show you something really quick, I'm actually going to take you over to the site because I want to be very, very clear about this. Theotrade.com/SKU. Okay. Enroll today. It's $297. When you click add to cart, again, theotrade.com/SKU. When you click add to cart, all right, and the reason I'm actually clicking on this is I want to take you through last name, yada, yada, email address, street. First and foremost, put in your phone number. Why do you want to put in your phone number? Put in your phone number because that's where we can text you. Use a cell phone number. Do not fear a ton of text messages. We do not send out a tremendous number of text messages. Okay. We text you when it is pertinent, when there is an execution done. Okay. At most, you would get 4, maybe 5 texts in an entire week at most. Very, very hands off. Okay. So your phone number for text messages. The other aspect I wanted to discuss on here, because everybody asked this and they're already asking it in here. All right. And that's this. It's a single payment. Okay. This is not a membership. We don't do that. Our clients don't like memberships. We have over 6,000 active members right now on TheoTrade. We don't do membership. Okay. You just pay us $297, or you can even pay us, $149 broken into 2 payments, or even $100 into 3 payments. That's up to you. Okay. But I just wanted to take you through that because there's always questions on that front. Okay. We're here to answer some questions. I'm going to answer a few questions for you here. But again, we also give you the TheoTheta portfolio. Just click add to cart and you're good to go. I want to remind everybody at this point, TheoTrade's completely riskless. Money back guarantee. It's the second time I talked about this. If you're not happy in any way, shape, or form in that 3 month, in that 90 days, just ask for your money back. Don't worry about it. We'll give it back to you. Again, every single person that's at TheoTrade, we want you to be here. And I can't stress that enough. We want people that want to be here, that want to learn. Our archives, again, they're deep. I think you're really going to enjoy what we do here. And again, when you need help, ask for it. Okay. The money back guarantee has absolutely no stipulations. We've changed that recently. We used to say you had to trade, you had to do this, a little dance, make a little love. We took away all the stipulations. You know why we did that? Because we realized no one in this business can do what we can do here at TheoTrade. We can keep pace with the number of classes we have, 8 full-time instructors, the support that we're doing, and we know it. So again, no excuses, no questions, no commentary. You're going to see, like, this is the place. You're going to learn this business. TheoTrade's the place to do it. By the way, if you receive a refund, you get bonus number one on us. Bonus number one is the quick start guide. You get to keep that forever. Okay, we just give you access forever to it. Get into TheoTrade now. We're going to work with you directly. There are 30 riskless spots, okay, on that deal. We do that simply to incentivize you, obviously, to enroll for TheoTrade, but we also limit you to 30 riskless spots simply because we answer a ton of emails here at TheoTrade. We're constantly reconciling people's positions, so we limit to the first 30 individuals that enroll today. Again, the first 30 individuals that enroll today get the 90-day riskless money back guarantee. Again, it's only $300 anyway. Nevertheless, we do that to incentivize for the first 30 people that enroll today, completely riskless free ride on us. We give you unlimited email mentoring. Send us your trades. We can reconcile those. The $297 riskless offer has never been available. It's Ultima Premium plus Theo Theta portfolio, and there's no stipulations in the money back guarantee. Again, what our members are saying, this comes from John in March. My closed year-to-date profit in Ultimate Trades has paid for my yearly subscription. And this says, nice, thank you, John. Again, you get Ultima, you get Quick Start Guide, okay? You get over 100 classes. You get access to our chat room, okay, which obviously includes email support, Theo Theta Live Portfolio, which is the portfolios that I manage, okay? Technical analysis toolkit, day trading treasure chest, the mindset classes from Steve Miller, quick start guide to ultimate trades. Those are all bonuses. All of this is incorporated for $297. Again, go to theotrade.com/SKU. Follow me to the link for the auto expected move indicator. Apologize for not displaying this earlier. Okay, if you would like the auto expected move indicator, theotrade.com/SKU. It's right to the bottom of the page. Okay, again, it's right on the bottom of the page. A few aspects I want to cover on here. By the way, if you, as you're enrolling, you need not download TheoTrade's indicator from this site. We actually have all of the indicators on a separate area. So don't worry about downloading that right now. Those of you that are enrolling, just click add to cart. Again, if you have any questions about stipulations, well, there aren't any questions, hit us in the chat room and I'll be able to answer some of those for you. Again, it's TheoTrade. I want to reiterate that, theotrade.com/SKU, S as in Sam, K as in kick, E as in echo, W. Let's actually cruise back over here, answer a few questions for you. By the way, I wanted to show you guys a couple of quick emails. Wanted to drop you a quick email. I think the class is wonderful. I've been stretched each session, not beyond my capability. After each session, I watch the recording and do the homework. I feel each week that my knowledge of options trading is growing steadily and rapidly. I obviously can't speak for my classmates, but it's going very well for me, and it's a great instruction from Jeff. Here's another one that I wanted to bring to your attention. This comes from Todd Summerall. Just really summed it up. He said, don't know if you remembered me, but I emailed you a few weeks ago, okay? And you told me my delta, well, he said, I told you my delta was a positive a couple thou or more. Basically, Todd emails me and tells me his portfolio is just massive, huge amount of risk, okay? He told me smash it or I was gonna be in trouble. I smashed it. He saved my account. I just wanna thank you, okay, for your information. Before Theo, I had no clue about portfolio delta. Big hearty thanks to you and all of your team. My finances would have been a goner without your advice. Okay, you can use this if you want, and I am. And the reason I actually throw this email up here is simply because, this is an individual that emailed me and said, like, what do I do? And I want you guys to know that there's no one else in this industry, in the education industry, that's willing to go out on a limb and answer emails, and we absolutely unequivocally are. It's a big portion of our business, and I want you guys to know it, okay? A couple of questions I'm gonna answer for you, then I'm gonna answer some specific questions. By the way, somebody actually asked me in here, how will I know if I'm in the first 30 riskless spots? I will gladly read off the name. I'll read just the first name in the initial, okay, in your last initial, and you'll know if you're enrolled in those first 30 riskless spots. Is that okay with everybody? So again, we have 30 riskless spots. When I say the riskless spots, effectively what I'm saying is we have a 90-day money back guarantee. We're only going to give you 30 spots today, obviously to incentivize you, but because we answer a lot of emails, and you just can't take 1,000 people in a given week and just always give them a riskless deal and a free ride. So we give the first 30 people that are enrolled today kind of that free ride and unlimited email mentoring, which is it's huge. All right, I'll read off the names of those first 30 individuals that are enrolled today. Number one, you need a laptop and an internet connection. These are just some very general questions. Like people always ask us the same generalized questions, and I want to approach those very questions, and we're going to do just that here. And then again, I'll read off a couple of names. It takes me anywhere from 5 to 7 minutes to see a name actually appear on the screen. So we have everything that you're going to need here at TheoTrade to get started. I'll tell you right now, you could even trade off of a tablet today, and I think you'd be fine in doing so. So we have everything you need, but you do need some type of mobile device and an internet connection to either watch TheoTrade and to execute trades. That's it. We will give you everything else. And if there's something that you honestly think that you're missing in this business, let us know. Email me. That's what we're trying to incorporate here at TheoTrade is everything. This is the one-stop place to get everything you're going to need in this business. Number two, this comes up all the time. This is not a membership. We do not auto renew or auto bill. So after your 3 months is up, we literally ask you, would you like to do TheoTrade again? If the answer is yes, then please join us. That's worked really well for us. This is not like a gym membership where you can never get out of the gym membership. Number three, we are now providing TheoTheta weekly video updates. That's that 12-minute video. In 12 minutes, you can get everything that I did in the portfolio for the entire week. Number four, TheoTrade, we archive everything. We understand that you can't watch all day, every day. So what do? We archive it. You can watch it in the off hours. You can even watch it at 2 times or 3 times the speed. We sound like chipmunks, but does what it, whatever does it for you. Number five, we give you access to TheoTrade Mobile. TheoTrade Mobile, which is on an iPad or even a smaller device like a phone, okay? That's fine. You can actually see fairly well. The clarity on the phone is much better than I thought it would be, but you can even watch it offline. So you could just download TheoTrade Mobile today, okay? Number six, add your cell phone number when you're enrolling today. I already mentioned that, but add your cell phone number and it will enroll you automatically for text messaging, okay? Again, you can download TheoTrade Mobile for push notifications. You can email us anytime, all right? Anytime, and you're going to receive a response within 24 hours, okay? That's pretty critical that you can do just that, including trade-related questions. Now, I hesitate on this one. You go, oh, 24 hours. All I'm saying is, listen, don't email us on expiration Friday with 5 minutes to go to the close because we trade and we're very active in trading. So I urge you, give us a little bit of time. We respond within 24 hours. Any of the instructors, it's not just myself. When I email Corey or Jeff Bierman or Matt Williamson or Brandon Chapman, okay, any of the guys, right? We're more than happy to answer any of your questions. There's always that questions that come up. I mean, we're pretty good at covering some of the angles and the questions while we're live or whether we're doing the classes. Always stuff comes up, and it's stuff that pertains specifically to your portfolio. I don't mind your first couple of trades, bounce trade ideas off of us. Like come in there and say like, hey man, this is what I'm thinking of doing. Am I doing it right? Okay. Listen, you're going to gain access. Number 8 here, every course that we've done in the previous 5 years, you get classes, you get coaching sessions, general archives, live trading sessions, everything is searchable. We have a full search engine on TheoTrade, name and trading topic, and we've got an archive on it, okay? Number 9, variations of all the trades are available inside of IRA, retirement accounts. I stress this again to everybody here. what we're teaching you today can be done inside of an IRA. It can be done, okay, with as little as 5,000 in an IRA, 2,000 in a margin account. We will talk about that during the Ultima course. Okay. Number 10, we at TheoTrade can help you get approved for options at several major brokerage accounts. What we're basically saying on number 10, don't panic if your brokerage firm won't let you do something. We can help out, and help out we will. Number 11, there are 30 riskless spots available today. Listen, get results, take action, and enroll for TheoTrade today. So I'm now going to answer some of your specific questions in the chat room. Going to wrap things up. By the way, there's the first batch of names is just coming through over here. As I told you, it takes about 5 to 7 minutes before I actually see your name in here. But Jan H from California, John W from California, Mark M from Florida, Ronald J from Minnesota, Jim B from Texas, John A from Florida, Michael S from California. Okay, and again, there's a bunch more names I'll read off here momentarily that are actually popping up on my screen. Okay, Michael asked, can Don provide a formal definition of what exactly skew is when trading options? Okay. Okay, the exact definition of what skew is when trading options. Skew is defined, okay, as the implied volatility differential from the out of the money puts to the out of the money calls. When you actually look specifically, they have an index. It's called the skew index, and the skew index literally measures the implied vol, which is it's literally measuring, if you will, the volatility of the put versus the volatility of the call. And skew has never been higher than it is right now, which means the puts, it's like the marketplace is perpetually pricing in a crash that never happens. Think about that for a second. The marketplace is perpetually pricing in a crash, okay, that has never happened. And it's been this way pretty much since the onset of COVID. Everybody saw a crash, everybody's scared right now. Moving on, can you handle my portfolio if I invest $5,000 to $6,000? Well, one thing that I don't do is you can handle your portfolio. We do not execute trades on your behalf. You must execute the trades on your behalf. I'm more than happy to say that I am no longer in the money management business. I have actually managed over $300 million for the first few years of my career. And it's just not something that, you can follow every step and every trade that we do, but no longer on the brokerage and or trading execution side of it. And again, I have been involved heavily, as a registered investment advisor in the past. We no longer have that designation. I much prefer, I just execute trades. There are people, that trade for a living, and there's people that have to trade others' money for a living. I'm not the latter of those two. I don't need anybody else's capital at this point, and I haven't for years. I'd much rather not deal with that. The first bad day you have, everybody calls you up, and I'm not getting on the phone for that. I would much rather answer, questions one-to-one in an email, and I do just that. So I do hope that that helps answer that. Oh, I like this next one. Okay. Timothy said, the hedge scares me. I don't know what to do with it. When to close the hedge, when to open the hedge. Yeah, no, that is what we cover in the course. Not only do we cover in the course, we have several areas that we discuss. What do you do with the hedge? What if the marketplace crashes? That hedge is there to hold you, okay? And it depends on the conditions, but we will cover that specifically in the course. I mean, the course is not just going to put on a hedge, market crashes, okay? Put on a hedge and the market crashes isn't going to tell you what to do specifically. When do I pull the hedge off? Okay, when do I pull the trigger and have to put another hedge on against my positions? Do I close positions? Okay. All right, moving on from that one. So Timothy, I actually appreciate that one. Next one comes in and says, do you sell index options? Sure, of course. Okay, why not? Index options is kind of par for the course over there. Okay, index options, SPX, SPY is ETF, but still index. S&P options and futures is also good to go. Okay, just making sure we're good over here. By the way, George M from Minnesota. Okay, Wasim M from Wasim N, I'm sorry, from Massachusetts. Thomas B from Oklahoma. Irvine H from Canada. All right, onward and upward over here. They have a very small account, need to accumulate the necessary knowledge to go forward. Also to access brokers to US options, somebody requires, by the way, even if you're not if you're not in the US, if you're in London or so forth, we have a few brokerage firms that we will suggest to you. There is also a recent acquisition that was done by a European firm of a US brokerage firm. Again, there was a recent acquisition that was done, and it has now been completed of a European firm just bought a US brokerage firm, and that is going to change everything. Okay, you're going to be able to do anything you want, anywhere you want inside of US markets here momentarily. Um, as soon as that went through, it really did. It changed the scope, pretty much everything. Well, somebody said in a $1 to $2 million account, my question is, what's the scalable system to offer return on investment? So that is, in fact, also covered inside of the course over here. And we not only give you the best win percentages, with the larger portfolio, we fine tune what products you should use, meaning like what you should trade, and how to set up what's termed a portfolio margin account, which is going to give you significantly more buying power, are all aspects covered inside of not only this course, but some of the aspects of just capital management and larger portfolios. Okay. Um, yeah, Ultima, somebody said, will Ultima help me become a little bit more of a consistent trader? Absolutely. I mean, that's what it's about. It's about consistency in trading. And you're not going to take that one step forward, two steps back. You're going to take, okay, singles and doubles, and mitigate risk and exposure. And that's one of the most critical aspects, though, of you learning like longer term to have degrees of success in here. All right, a couple more over here. Somebody said, William said, since one cannot sell naked options in an IRA, will this still work? Okay, that is absolutely incorrect. You actually can, in fact, sell naked options. Brokerage firms, okay, everybody changed the rules. There is not a regulation against selling naked options now inside of an IRA account, but most of your major brokerage firms have refused to change their internal rules. They are looking at it and saying, I don't want you to do it. It's more of a pain. They can't build the technology to do it. We work with a couple of firms that do just that. You absolutely can do this inside of a retirement account. And that's important to me that you guys know that. Okay. I like it. Right. Well, if you're unable to watch, you trade, while you're at your day job. If you can't watch markets during the day, that's not going to be a huge issue at all. Ultima's pretty hands off over there. Okay, can you explain why there's a larger theta decay of out of the money? Okay, out of the money options just have a much greater decay rate. And it doesn't only have to do with the out of the money options and theta. It actually has a lot to do with the volatility exposure of that out of the money options. Okay, so excellent. I think I got most of the major questions in here. I'm going to sit in here and type a couple more answers to you guys here momentarily. But again, one of the biggest things that comes up in here, and a couple of people have also asked in here. By the way, a few more names just came through, and I'll read those off in a second. One of the biggest issues that comes in here is, again, it's not a membership. We just don't do that, and that's always this like ongoing question here at TheoTrade. After the 3 months, you just pay $297 again if you want to do it. Again, we want you guys to be here, and we want you guys to be happy here. You get the first 90 days completely riskless. There's a few other names that came through. Cleveland B from Illinois, Eric L from Minnesota, Jose C from Texas, and Mitchell H from Australia. By the way, if you're an Aussie, we'll get you set up with a good brokerage account down in Australia. So I actually finished up college in Australia. Very, very familiar though with securities regulatory issues down in Australia. So more than happy to walk you guys through. If you're over in Europe, Australia, Canada, we even suggest brokerage firms because not everybody necessarily is inside the US. With that, always know that you guys can get a hold of me. Always know that. Support at TheoTrade.com. I stress that to everybody. Go to TheoTrade.com/SKU right now to enroll. I thank everybody for joining us today. If I didn't read off every single name, feel free to shoot us an email to make sure, okay, that you're in for the riskless spots over there. That's important to us, that you're comfortable, that you've got 90 days money back guarantee. That's obviously, again, it's a big deal to us, and it should be a big deal to you. Thanks everybody for tuning in today and have a wonderful afternoon. Bye-bye.